whether Joe Biden gets credit, whether the Fed gets credit for what they've done so far is an open question out in public land.
Mike, I think it's easy for us to still feel like, we talk about it all the time around this table, is that it still feels like we're all paying a lot. And the whole idea of, right, it's inflation's still happening, it's just not happening, it's happening at a slower rate, right? Prices still going up.
I mean, right. Except for gas, except for eggs, I mean, that stuff has gone down.
Right, but
airfares have gone down. Used car prices have gone down. There are things that are going down, but in general, when a company raises prices, if it's not a commodity, then they don't go back down again. So we're stuck at this level of prices. What you have to do to get beyond that is to have your income go up above that, so that your income is exceeding inflation, and then people start to feel better because we can afford what these additional prices cost, and that is happening now. So it may be just a matter of a few months or a little longer before people start to notice.
So I want to bring up a chart for everybody, which is the change in personal consumption expenditures, and I mean, it does definitely look like I'm not sure if we're going to bring it up there. There we go. But you do see improvement, right?
Yeah, and steady improvement through the holiday season. Americans felt comfortable spending. We spent almost as much on services as we did on goods, which is better balance for the expenditure side of the economy. Then the question becomes, and this is going to get into the two-handed economist part, how were people able to do that? Wages went up, but they went up a little bit less than they did last month, and the savings rate went down. So are people spending out of their savings? This has been an ongoing debate, goes up or down, but it's something the Fed has to consider. Is this going to peter out?
Right.
And are we going to see a real slowdown?
Hey, Mike, a prevailing narrative over the past few months has been that the so-called last mile, getting from 3% to 2% inflation, is going to be tougher than getting from 5 to 3, for example. Has the data changed at all in recent days to say, actually, it's not going to be that tough now that we are sub 3%?
Well, you see some people making that argument. I don't know that that's necessarily true. The problem is we've been wrong about everything in the economy for the past 2 years. And the idea was that the little bits of inflation that you're getting are going to be in different pockets of the economy that are sort of hard to squeeze out because maybe there's a shortage there or something like that, or a reluctance to stop raising prices, or an ability to keep raising prices. And we don't know that that's necessarily the case. So the Fed is just going to kind of take the numbers that they have. Mm-hmm. When you talk to Fed bank presidents around the country who were talking to the CEOs in their districts, they all say that the CEOs are starting to say we're done with raising prices in general because we've got a lot of pressure coming back at us, and now our input costs have stabilized. So if that's the case, then maybe the last mile isn't as hard, but we're not going to know until it happens.
Yeah. Fingers crossed for shipping issues to certainly get resolved.
That's a thing, though. Shipping issues are not a big deal. They're a big deal for Europe, right, because most of the stuff that's going through the Suez Canal and up the Red Sea goes to Europe. And for the U.S., it's not a big deal. And there are thoughts that maybe it could raise inflation if extended over the year by a tenth or 3/10 or something like that. But it's not a problem for the U.S. And the easiest way to look at it is gasoline prices are not going up. So that would be the way the Americans would first feel it.
Onward to that first Fed meeting next week. Michael McKee, off to a weekend, I hope, because we know you've had a pretty long day. Michael McKee, thank you, international economics and policy correspondent here at Bloomberg News. All right, from the eco data, we go to a story that is the most read on the Bloomberg, or among the most read all day today.
Yeah, broke after the close yesterday. It raises the question, is Jamie Dimon possibly setting up to really, finally, could it be, actually say goodbye, Carol?
I don't know. It looks like it. The actual news, by the way, JP Morgan Chase, Jamie Dimon, of course, the CEO there, moved some of his top lieutenants into new senior roles, positioning them for more experience running the firm's operations as he prepares potential successors. That's how we reported it out. It does look like he's giving people some more experience or bigger experiences, if you will. So what does it mean? Bloomberg News senior finance reporter Sri Natarajan is here in our radio studio. Sri, what does it it mean? 2.5 years left. Is he kind of getting ready?
Let's be clear, that 2.5 years is just the 5-year retention package he got. That doesn't necessarily put an end line for the Jamie Dimon tenure at JP Morgan Chase. Look, it is the latest edition of the musical chairs at JP Morgan, where Jamie Dimon is conducting this move. We've seen this before, we're seeing it again. And the thing is, any organizational reshuffle that we see now, this many years into Dimon's tenure atop the country's largest bank, the most profitable bank, obviously begs the question as to what are the tea leaves we can read from it about succession. Who is best placed? So actually, just let's look at
Let's read some tea leaves.
Let's look at the names here. Here you have, till yesterday, people would have argued Jen Piepzak and Marianne Lake are the two executives who seemed best positioned to be the successor to Jamie Dimon. So what does this shuffle do? You're taking Jen Piepzak from the consumer and community banking side of it, one of the largest parts of this giant bank with a $4 trillion balance sheet, and moving her to the commercial and investment bank side, alongside Troy Rohrberg, who's the trading head, who now gets expanded responsibilities, and by virtue of this promotion, gets added into the mix of potential successors in a serious way. You have Marianne Lake, who's getting expanded responsibilities in the consumer and community bank side, and Chase still is the big beast, big component of JP Morgan Chase. My read of it, you have three contenders. Jen Piepzak gets to now have run all the important parts of JP Morgan. So I would put her a hair ahead of Marianne Lake, who's still a very solid contender, but Troy Rohrberg now suddenly leaps into the mix as a long shot contender. But it all ultimately depends on how much more time Jamie Dimon wants to spend holding the reins at JP Morgan Chase.
I just got to say, I'm just loving that there are two women who are strong contenders potentially to take over for Jamie Dimon at JP Morgan. Is that something that has certainly been important to him in terms of the role of advancing women at that firm, and then maybe, getting ready to set somebody to lead it?
I'm sure he would say it's been important to him. I'm also sure that he'd probably say that at the end of the day, the successor that he picks or he helps the board pick or the board decides is not going to be decided based on whether it's a woman or not. He's had two contenders in the mix. A few years ago, the move would have been extremely symbolic and valuable, but the fact that Jane Fraser became CEO at Citigroup sort of stole the thunder from JP Morgan. For the longest time, we always thought that maybe 12, 13, 14 years into Jamie Dimon's tenure, when he's ready to hand over the reins, it would be a woman running the country's largest bank. But Jamie's still there. And Jane Fraser is now the CEO of Citigroup.
And that's what I wanted to talk about. Jamie's still there. He has at least 2.5 years left on this portion. What do we know about it? It seems like he has a lot of fun doing this. It really does. I mean, he's been doing this since 2005.
He seems to be having more fun than ever before. He still has a spring in his step. He's still ready to be the sort of the dean of Wall Street CEOs, the speaker of the caucus, if you may. He's representing the industry in DC. He's speaking his mind. Look, that's been true of Jamie Dimon forever, but more so now than ever before. And the stock's been up 25% in the last year. That's called winning, and that does not make anyone feel bored or tired.
So 2005, he became president and CEO. So would 2025 be a nice round number to come off of this position?
If you could read into his mind, sure, that sounds like a nice round number. Yes, he's closer to the end of his tenure than not, but at the same time, he's playing his cards very close to his chest.
You could argue that 2030 also sounds like a good round number. To
2050.
What about the bill? What about have they moved into the new building? Forgive me if I don't know that.
No,
it's still very
so
much
when
under
is that
construction.
done? When is that done?
That's the other favorite parlor game. At least I've had a bet with at least some JP Morgan executives, and I said a good time to call time on his time at, I said time 4 times in 6 words.
It's okay.
But a good time to call time on his tenure at JP Morgan would be when the new building's completed. Call it the Jamie Dimon building and say goodbye. But I have been definitively told that if I were to make that bet, I would lose it.
Shri, 20 seconds left. Is there anything else we need to know about the people moves announced yesterday? Because it wasn't just these 3 individuals you named.
There were other moves beneath that top layer, but the most important news for all of us is it clearly puts the spotlight on these 3 individuals. And when we think about succession and when we think about who will run the country's most profitable bank. It's these three names we have to look at right now.
Really fascinating, and it certainly popped when the news crossed yesterday. Sri, always making sense of the comings and goings on Wall Street. Thank you so much. Really appreciate it. That is, of course, Bloomberg News senior finance reporter Sri Natarajan here in our studio at Bloomberg headquarters. Shares of JP Morgan, by the way, they're up about 1.4% so far this year, just down a little bit in this trade. You are listening and watching Bloomberg Business Week. Carol Master, Tim Stanovic. This is Bloomberg.
Bloomberg World Headquarters. I'm Charlie Pellet. U.S. stocks continue to trade mixed on this Friday. We are on track for a winning week for the S&P 500 index. Right now, though, we got the S&P trading lower by just about 8 points. Drop there of 0.1%. Dow Industrials up 23 points. A gain right now of about 0.1%. NASDAQ trading lower by 59. Drop there of 0.2%. The Russell 2000 index of small cap shares in the green up 0.2%. 10-year yield at 4.1%. runs 6% with a 2-year yielding 4.36%. Gold, a lower little change, down less than 0.2% right now, 2016 the ounce. Bitcoin, big story today, surging 5.5%, 42,091 on Bitcoin, while crude oil, West Texas Intermediate, up 0.8%, 78.02 a barrel on WTI. Speaking of oil, Scorpio Tankers, a ticker STNG, Sting, higher after getting a 22% price target boost at Jefferies. Today, we're looking at shares of Scorpio up by 3.2%. And Olin, a maker of chemicals and ammunition, is gaining today after posting fourth quarter profit and sales that topped expectations. Olin up now by about 6.7%. Again, recapping, U.S. stocks trading mixed. S&P down 6, drop there of 0.1%. Gold, one more time, little changed, down 0.2% at 2017 the ounce. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Much appreciated, Charlie Pellet. Well, could Eli Lilly be the first $1 trillion big pharma company? And what might get it there? You might be surprised, or maybe you won't be surprised by the answer. What you might be actually surprised by is how not having first mover advantage might be better for the company in the longer run. This was a story that reminded us of some other industries where not having the first mover advantage actually played out well in the end.
Yeah, well, let's get to the interview. That reporting by Bloomberg News health reporter Madison Muller, who has been doing the play-by-play for us all here at Bloomberg when it comes to the GLP-1 class of weight loss drugs. That was one of the major investment themes of 2023 and continues to be this year. Madison is here in the Bloomberg studio. Madison, I feel like this story is all about like better late than never, or more better later than never. Eli Lilly could have been way out in front when it comes to a GLP-1 drug if only they had listened to one individual. Who is that?
Yeah, that is Richard DeMarchi. So he was a scientist for 22 years at Eli Lilly. He had a pretty big leadership role there, actually, in drug development and research. And he was saying, 30 years ago, obesity is going to be a big thing. And at the time, he said the company was just not interested in pursuing it.
And this was before obesity was even classified as a disease here in the United States. It was seen as something completely different than it's seen as today.
Yeah, exactly. It was seen as more of a lifestyle condition, sort of the fault of the patient, which we know today is not true. There's so much scientific evidence backing that this is really a biological disease and condition, and people don't really have control over it. But DeMarchi saw early on in studies and research that was coming out at the time that these GLP-1 drugs that we know today as Ozempic and Wegovy and Zepbound had the potential to effectively lower body weight. And he was like, this is going to be a big deal. But no one really listened to him back then.
They ignored him.
Yeah, that's what he said, yeah.
He filed a patent, though, but then he went and left Eli Lilly a few months before it actually was issued, correct?
Right.
So they still owned his work.
Yes, exactly. And I mean, the fact that he left 2 months before this patent was actually issued is funny timing, but he had grown so frustrated at the company. He said it was sort of like a prisoner's dilemma because he wanted to do this research. He really believed in it, and he just didn't see a path forward at Lilly. Lilly didn't see a path forward really. At the time, there were no obesity drugs. Weight loss drugs weren't really a thing besides fen-phen, which did not turn out well. That was sort of the time we were in the 90s. Fen-phen obviously was hugely popular as a weight loss drug, but turned out to have some really bad side effects and caused heart problems. So at the time, there was just a lot of hesitancy to pursue weight loss drugs in pharma.
Well, Eli Lilly is trying to make up for lost time right now.
Yeah.
The fact of the matter is, though, is there's Novo Nordisk, who's been doing this as well.
Right.
What's the status of the competition here and the way that these two classes of drug, or this one class of drug, these two drugs that each of these companies have, are different from one another?
Yeah, so Eli Lilly's drug Zepbound, which for diabetes it's called Mounjaro, it was approved a little bit before Zepbound was. It combines GLP-1 with another gut hormone called GIP, which as it turns out is more effective for weight loss. And it's sort of what scientists have figured out is that by layering different combinations of hormones together, you can get more weight loss. And there's also some emerging evidence that there might be less side effects as well from this GIP component. They're actually studying it for anti-nausea effects, so they think it could be potentially another drug that's used for chemotherapy patients to help them not be nauseous when they're taking chemo. So the potential there is that actually there might be less side effects from the drugs as well, because we know that Ozempic, Wegovy cause nausea, vomiting, diarrhea, all these GI effects.
This is what's so interesting. We keep checking in with you because as the process moves along and as drug companies continue to do research and come up with new ways, they're finding that these drugs can potentially do more and more, so much so that we've got a great chart. Eli Lilly's, like, their shares alone have taken off. They're up nearly 60% last year, gaining another 9% this year. Your story notes that Goldman Sachs expects the company to own half of the obesity drug market by 2030. I mean, we're talking about some big potential for Eli Lilly and the other players. This market, these drugs, the potential uses just continue to grow, don't they?
Yeah, I mean, that is what we're seeing. It's like, and the reason why Lilly is growing so much, I guess, and why the expectations are so high for them is because they have this pipeline of next generation products as well. They have a pill in development that looks to be the best of all of we've talked about pills on this show, how all the drug makers sort of think that's like the next big thing in obesity drugs. Lilly's looks to be the best there. They're also developing another drug called retatrutide that in trials helped patients lose a third of their body weight, which is just, I mean, unbelievable. That's so above and beyond any other product that's in development. So the potential of their next generation products, not even the one that they have on the market now, is so enormous that that's sort of why their valuation is so high now.
And maybe be a $1 trillion pharma company, potentially.
Yeah, potentially.
I think one big unknown here continues to be the relationship that insurance companies have with this drug. We've spoken in the past even to folks who are concerned about state health systems running out of money as a result of people using these drugs.
Right.
What's the status of that, and how does that play into the way that investors are going to look at this?
Yeah, I mean, so that's hugely important in terms of when we're talking about the potential that these drugs have. So I think the blue sky sort of high end of the estimate is Zepbound could bring in as much as $70 billion in 2030 for Eli Lilly. And that's like best case scenario if, insurance covers it across the board, if uptake is really high, sort of the penetration into the market is extremely high. But the more realistic case that we're looking at is like $26 to $35 billion by 2030. This is based on, estimates right now. But that's because there are still some hesitations when it comes to insurers, and insurance companies are not widely convinced yet that they're worth covering. And that seems to be what is going to be the case for the next, few years or foreseeable future. And so, I mean, we do see more state Medicaid plans starting to cover these drugs, but Medicare doesn't look like it's going to budge, and employers, we're looking at like a third of employee health plans are covering these drugs. So it's still pretty spotty.
On the flip side, if it means you don't have to get a knee replacement because you lose weight and you're not putting stress on your body, or if you don't have heart problems because you've lost a lot of weight, insurers are also looking at that side. And they're also looking at, now they've got a buffet of choices. Eli Lilly has been kind of smart in terms of pricing, haven't they?
Yeah, so they priced their drug at a 20% discount to Wegovy, and they said that part of the reason why is to appeal to employers and to also appeal to insurance companies because they're going to be looking at that when they're making decisions about which drug to cover.
Well, so how do doctors determine which drug to prescribe?
So that's a good question. I mean, I think it's interesting because it's like these are prescription drugs, so you're not going to the pharmacy and picking Zepbound or over Wegovy, at least a patient isn't themselves. And so there isn't a lot of direct-to-consumer marketing happening yet. Wegovy actually just started advertising, or Novo Nordisk just started advertising Wegovy last week. So Zepbound isn't even running, there's no commercials yet for Zepbound or anything like that. And so the doctors are the ones that are making the decisions about which drug to cover. And so part of the importance here is that the companies need to convince the doctors that their drug is better and that their drug is the one that they should be prescribing to patients. Ultimately, a lot of those decisions come down to insurance coverage and price, and doctors want their patients to be able to afford the drugs they're taking. But
is it fair to say they're all the same? But as I talk to you, it sounds like there are some differences in each drug.
Right. There are some differences. And, based on the studies, Zepbound does look to be more effective than Wegovy. And the companies, or Novo Nordisk at least, would kind of refute that because there haven't been any head-to-head trials yet that have directly compared the drugs. There will be one coming out next year. But based on like what we've seen and the possible amount of weight that can be lost on the drugs, we're looking at a lot more with Zepbound.
Are they still considered weight loss drugs, or initially they were for diabetics and diabetes? Are they hand in hand also diabetes drugs?
Yeah. So we do. I mean, Ozempic is a diabetes drug. Mounjaro is a diabetes drug, and then Wegovy is the weight loss version of Ozempic, and Zepbound is the weight loss version of Mounjaro.
And just in 20 seconds, a little differences between the weight loss versions and the diabetes versions?
For Ozempic and Wegovy is a higher dose version, but Zepbound and Mounjaro, they're the exact same drug. Identical drug, just approved and marketed differently.
It's a fascinating space. And like we said, it was one of the major themes, I feel like, on the investment landscape last year and continues into this year. Madison, thank you so much. So appreciate it. Madison Muller, health reporter at Bloomberg News, here in our studio. This story, by the way, the Bloomberg Big Take, you can read more about it on the Bloomberg and at Bloomberg.com/Big Take. By the way, shares of Eli Lilly up 1.4% today.
All right, well, let's go from New York to Washington, D.C. for a check of the latest world and national news with Nancy Lyons in the Bloomberg 99.1 Newsroom in D.C. Hey, Nance.
Thanks, Tim. Jurors in New York are deliberating damages in Donald Trump's defamation trial that was brought by writer E. Jean Carroll. Earlier the day, Trump arrived late to court and walked out on the closing arguments from Carroll's attorney. He then came back 45 minutes later after she had finished. He's already been found liable for sexual assault and defamation. This jury trial is determining how much he should pay Carroll, if anything. The U.S. is pausing funding for the UN Agency for Palestinian Refugees. This comes after a dozen employees were accused of being involved in the October 7th attack on Israel. The State Department says additional funding for the agency is being put on hold as it reviews the allegation and the steps that the UN is taking to address them. Earlier today, the International Court of Justice issued a preliminary ruling saying Israel must prevent acts of genocide against Palestinians in Gaza. Israeli Prime Minister Benjamin Netanyahu says it's Hamas that's committing genocide.
Israel will continue to defend itself against Hamas, a genocidal terror organization. On October 7th, Hamas perpetrated the most horrific atrocities against the Jewish people since the Holocaust. And it vows to repeat these atrocities again and again and again.
Netanyahu and the Israeli government have been given a month to submit a report on how they'll implement the court's request to prevent and punish any incitement of acts of genocide and to preserve evidence of any such wrongdoing. Alaska Airlines says today it's returning 737 MAX 9 jets to flight for the first time since a panel flew off one of its planes in mid-flight January 5th. Alaska Airlines says more planes will be put into service as more inspections are completed. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Nancy Lyons. This is Bloomberg.
From Bloomberg World Headquarters, I'm Charlie Pellet. We're looking at a mixed market on this Friday, on track for a winning week for the S&P 500 index, down right now, but on the week we do have the S&P higher by 1%. So here's where we stand. Mid-afternoon, we've got the S&P trading lower by 3 points, drop there of just about 0.1%. Dow Industrials up 36, higher by 0.1%. The NASDAQ Composite Index.
And stay there because there's all sorts of things going on in the station. Interesting people around the piano today, so let's do a little bit of rock and roll. See what time it is. Hit that like button, by the way. Hit that like button and type in where you're watching from. Very, very cold here in London today. It was like -4. But somebody's put some purple balloons on the piano, so all is well. So hit the like button. I'll do a few songs for you, and just stay there because there's a lot of kind of surreptitious activity going on in the station. I might need your help. So stay there, hit the like button. Let's rock and roll.
Same tune as part one, I haven't got any words with you.
Well, it doesn't matter. Do it again because I've got the microphone.
Oh, okay.
Go on, do it again. We've got Jim here from the Japanese TV queue. There's a load of Japanese people here doing. Can you see them? There's all sorts of stuff. We've got a Japanese TV crew in the station. Go on, Jim. Perhaps we can do a bit of microphone.
Well, if I do that trouble in mind.
Well, do the same thing again. Go on.
The same way. Yeah. Okay. I'll do it.
But we've got a microphone, so he's going to blast. Don't put it too clear because.
I've got a blast there. Trouble in mind. pacify my mind.
we're singing in the middle of the song.
Come to me for a shorty, please my soul. Lord, I ain't never had so much trouble in my life. I'm gonna lay my head on some railroad line. Gonna let that midnight freight train pacify my mind. Hey.
Amazing, Jim. Well done, Jim. Absolutely amazing. Jim's here with the whole there's a whole Japanese team. I think she's nice. She go, hello, can you dance? Can you do a dance? Oh yeah, of course. We've got the Chinese here.
Our own agreement with other people that we cannot be shown online. We are so sorry about this.
So who's allowed to record you then?
Just making sure you're not recording us, yeah? Because if you are recording us, that when we are saying this, you're still recording, and then we will put a legal action into it.
Oh, okay.
Yeah, we will put a legal action
Really?
into it.
For what?
We will.
Legal
I'm
action
sorry,
for-
this is the end of the conversation. This is our right we're protecting, and that's it.
But what right? I don't understand.
Image right.
Image right?
Yeah, we're not sharing this
Are
image
you
right.
from China?
That's not a question. The only thing we are arguing is that
Yeah.
we are protecting our own image, right? You're not sharing.
But we're in public.
Yeah, exactly. No sharing.
So we're not allowed
no
to share?
sharing. Yes, no sharing us. Share yourself, that's fine. No sharing us.
Okay.
No sharing.
Please share me.
Oh,
Yes.
yeah. So who,
And if one
but
day,
you see,
like,
the thing is, we're in a free...
I'm really sorry, we're on a schedule
But,
here.
so
That-
me too, but we're in a free country, mate.
That's true,
We're
you
not
are in a free
communist
country.
China now, you know.
Oh,
It's a public
It's public,
one.
but you-
we can use it as well, yeah.
Yes, you can.
Yeah,
Yes,
that's
and
right.
anyone can film because
Yeah.
in the UK it's a free country
That's
and
your,
anyone
but
can
we
film.
have image right. We have
Not in
image.
public. In
No,
China,
no, no,
but we're in,
no.
we're not in
No,
China.
no, I have my choice. I don't
No,
want
but
my...
we are in Britain, Great Britain. We're not in China.
because you're touching my friend.
I
Are
touched
you
her.
allowing her to touch you?
I touched the flag.
No.
I touched the flag.
Doesn't
mate.
matter. You are
And
approaching
also
her with
you're
your hand.
You're getting a bit aggressive. You are.
No.
I think we better leave this.
Listen, mate. Yeah, you bet.
I'm sorry, you can't
I
touch her.
Well,
Please
you
don't touch
can't
her.
touch me.
Please don't touch her. Please don't touch her.
Oh, do you wanna
Please
say-
don't reach your hand. Please say sorry to her.
Well, I want you to
Please say sorry to her.
No, we're not in China,
that's
mate.
fine. We're not talking about race. This is not a racist issue. Please
We
don't
just
call
want
us
to
we're not in
celebrate
China.
New
This is the
Year.
moment that you're trying to reach her hand, touch her without
I'm
her
not trying to touch.
permission.
I don't want to touch you at all.
That's good. Stay away. Don't touch her.
Well,
don't
away,
touch
and
her.
away
Stay
you
away.
go. We're in a
Stay
free
away.
country now, mate.
Stay away.
You're
Don't
not
touch her.
obviously
Don't
used to
touch her.
democracy.
Do not touch her. Do not touch her.
I'm not touching
Do not
anyone.
touch her. Do not touch her.
I don't know why
Do
you
not
get-
touch her. Do not touch her.
Do you wanna keep
Do
saying
not
that?
touch her. Do not touch her.
I'm
Are you
not touching-
miming me? Are you miming me?
Yeah, I am, yeah.
You're miming me.
I am, yeah.
You're miming me.
Yeah, I
You're
am.
miming me.
I am, yeah. What are you going to do about it?
Wait for it.
Yeah, I'm waiting for it.
What's her name?
What's my name?
Yeah.
What's your name?
What's her name?
not
Are you
telling-
trying to answer or not? Do you want to answer? If you don't want to answer, that's your right.
What's
You
your
don't have
name?
to answer.
Oh, is it my
Don't
right? Are
answer
you
it.
going to tell me my rights?
No, I'm not telling you anything. I
Yes,
just
you-
want you to not reach your hand to my friend.
And I
touch
don't want
her
you to
friend.
shout, mate.
No,
I'm a
that's
shouter.
fine. If you don't reach your hand, that's fine.
I'm not. Are you going to apologise? Are you in the Communist Party or something?
That's fine. That's fine.
Then leave him alone. Go and
We
leave him alone.
can use it. Why not? It's our choice. It's
No,
our
but she's
right.
saying we're
It's
not
our
allowed-
right.
Please
It's
don't
our
use it.
right.
He was here already. Get that camera out my face. Look.
No, it's all right.
He doesn't look like he's very aggressive.
Oh, do you think I'm trying to touch your friend?
Come on, look at his stars. Does he look very
Leave him.
aggressive?
Listen. Don't like it. Fuck off,
You cannot say like this way. You cannot say like this way. You cannot say like this way. Who are you? Who are you? Why you say like this way? Who are you? Who are you?
Yeah. So basically, they were filming, and we say we're nicely approaching them. So we need to use our image. Is that right? I know, but we were walking around with saying public.
If they're filming,
If we're having a
So
police
can we
matter,
say
you
to
need to
them
put that phone
No,
down.
we're in public because I'm going to record this.
Yeah, that's the thing. When we,
It's all right now.
You're not live streaming this on your channel, though.
Your face will be on that video. I think it's free speech, actually. Right, there we go. So we've got a few people from China telling us that we're not allowed to film. Listen.
I'm so sorry. What annoyed me was like, let's all celebrate the end of that piece.
Is anyone actually watching this?
Yeah, we've got 788 people.
Yeah, so hold on, we've got the police here, we've got the Chinese Communist Party, and let's see what's going on. I think this is
They'll do anything to make a program.
They came over, Jim. They came over and said, you're not allowed to film us. We're in a public space, in a public piano, and they said, you're not allowed to film. And they were waving Communist Party flags. And I said, oh, that's a communist flag. And they said, oh, that's racist. So what can you do? And then we've got the police here. We've got Kerry and them. And they're filming now, whatever. So stay there. We'll see what happens. You're coming to the live drama at the piano. This is Dr. K versus the Communist Party. I taught you here.
This is not to go on your channel, my love.
Well,
this is me talking to you.
Well, listen, Kerry, we're in a public space.
Listen, let me just have a conversation without with this doing in my face. Please.
Kerry, if you're recording
Listen, this is going on your YouTube channel. But I need to speak to you without this being on your YouTube channel.
Well, what about what? We're in a public space. What's the allegation? Now, you told me to stop filming, and now you say there's an allegation. The camera never lies.
Us being caught and I've been to do with it.
Oh, no, listen, Kerry.
Listen, you can't say that.
What, they're from China?
One of the problems is, people like you bash it so hard.
I play very gentle, listen.
Yeah, no, play. No, that's the stuff. Play like that, we got no problem.
Stay there, everyone. We'll see what happens. We'll probably have the flying squad here next.
Keep going for a couple of weeks more. Right, okay.
God bless. What the fuss is all about. We've got two police officers here, and basically I think it's a free speech issue. I think everyone should be able to express themselves in public, and if people don't want to be filmed in public, they should just walk away. Hit the like button if you agree. Okay, so that's what we're doing. Free speech for all. This is what it's free speech for all. Today. Basically, today's live stream is all about free speech, and if you've just joined late, what happened was a load of Chinese people came over and started laying down the law that I wasn't allowed to film them by the piano, even though, and then one guy started to shout and started almost kind of getting very aggressive, and then they called the police, and that was basically all about free speech. So now they've gone, the police have gone, and we're back to boogie woogie. So that was basically it. Free speech prevails. That's it for today. All sorts of drama in today's live stream. It was kind of like free speech versus different ideologies that don't want free speech. All right, mate. How you doing, mate? How are you doing? I've been playing since I was about 3. Yeah. What's your name, man? Okay, Brendan. Yeah, well, keep going, man. How you keeping? All right. Yeah, you got your wine. You got your red wine there. Yeah. All right, man. Well, listen, God bless you. You play a few songs for us. I nearly got in trouble with the police there, so I'm glad you come.
Coming up in just a moment, let's head to our Friday Options Insight with Bloomberg News markets reporter Abigail Doolittle and Interactive Brokers chief strategist Steve Sosnick. They are both in our studio. Abigail, over to you.
Thanks so much, Carol. And Steve, it's so great to have you with us here in the Interactive Broker radio station, since you are, in fact, the chief strategist at Interactive Brokers. I can remember years ago when we got our picture taken out there. So next week's going to be a big, big week with, of course, earnings for some of the big tech companies kicking off, the Fed meeting on Wednesday, and then, of course, jobs on Friday. Never a dull moment. What are your expectations right now? I mean, we have this VIX suppressed at a 13 handle. Why aren't investors more concerned when there could be some sort of an uncertain outcome, especially since these stocks are up so much into those prints?
You know, Abigail, keep in mind, it's always about fear and greed. And right now, I think it's more about greed and has been for some time. There's also, I'm going to argue, the lack of fear because, you know, some of the strategies that involve, ETFs that involve option selling or systematic call writing are becoming increasingly popular. And that's volatility flooding into the marketplace. So when we think about VIX, it's not the fear gauge, but it plays one on radio or TV, as I've said before. But I look at it really as the barometer for the demand for institutional hedging, and nobody's really looking to hedge right now. And that's really what it comes down to. People are sanguine, and they'd much rather chase a rally than hedge against a dip.
And that's been the theme for over the last year. And one thought is that the zero-date options, the one-day options, that could be a piece of it. Then another thought is that if people were hedging, they could be doing with treasuries where they're getting paid 4 or 5%. But you think people aren't hedging at all? You think that they're just so bold, so bullish that they just think that stocks are going higher from here?
Well, I do think that cash has become a preferred hedge because cash does pay you something. So you don't need to necessarily buy insurance because you're getting paid to sit on the sidelines in that case, at least with some of your money. The zero-dated options I dismiss a little bit because they're not really practical as a hedge. You can make money writing them, you can make money speculating in them, although the hedgers tend to make more money than the speculators. But it's not really a hedge per se. You can't hedge a secular move with a one-day option.
And speaking of not a one-day option, the VIX curve going out to October, it's pretty steep right now. Again, we have that VIX at 13. Then in April, I think it's maybe around 15. But for October, it's closer to 20 ahead of the election. Are people starting to hedge already ahead of the presidential election, which typically is supposed to be good for stocks?
Yeah, well, the VIX futures in October were just listed. Although I did look back at the S&P index. The S&P index options had been out there for a while, and this had been priced in for some period of time. It's natural, right? The election should bring some volatility. We certainly have two very, potentially volatile people likely to be running against each other.
Right.
And so that's really the market's anticipation. I don't know that we've seen a lot of active hedging yet ahead of the election.
Well, a VIX 20, that would be something we haven't seen in quite some time. Steve Sosnick, Chief Market Strategist over at Interactive Brokers. Thanks so much for joining us for Options Insight. Tim, Carol, back to you.
All right, guys, thank you so much. Great stuff. Hey, we do want to mention a headline crossing, certainly related to those geopolitical concerns. Trafigure, which is one of the world's largest suppliers of commodities, says an oil tanker was struck by a missile in the Red Sea. We talked about the concerns in the Red Sea earlier in the week, Tim. And obviously, we understand the Middle East tensions and the missiles necessarily going back and forth make it really problematic for anyone trying to get through.
Yeah, some breaking news just crossing the Bloomberg terminal just now. We'll continue to bring you updates throughout our program over the next couple of hours on that breaking news situation. Other than that, Carol, we've got a lot coming up on Business Week. Intel getting slammed. We got the cover of the new Business Week issue and alternative real estate. We dive into that as well.
All right, lots coming up. Everybody stay with us. Bloomberg Business Week on radio, on TV. This is Bloomberg. close of this session, you are watching Bloomberg Business Week live from the Bloomberg Interactive Broker Studio on YouTube and Bloomberg Originals. We've got a lot coming up in the next couple of hours, Tim.
Yeah, we do. Talking about Intel, the company having its worst day in years. The CEO, though, says the reaction is overblown. Is it?
I don't know.
That's a question
we'll
I'm
see
gonna
what.
ask.
Yeah, exactly. We've also got the cover story of the new issue of Bloomberg Business Week. After making historic gains, the president of the UAW has his sights set on Tesla. Interesting take here.
Also, the opportunity in so-called alternative real estate. We're talking student housing, self-storage, and senior housing. With a guest who was very bullish on the sector.
We've kind of been all over.
Yeah, we've done a lot of real
different
estate.
segments
It's pretty
of
cool.
real estate, which kind of shows the investor interest in this year when we might see and are expecting to see the Fed lower rates, which should give some help to that sector. Also, if the economy keeps kind of chugging along like it has, or moving along slightly. We watch the growth rates. David Weston also stopping by as he gets ready for Wall Street Week at 6 p.m. Wall Street time tonight. We'll hear from former Treasury Secretary Robert Rubin. That's one of his guests.
Also, the guy who wrote the book about Boeing, it's a New York Times business bestseller, stops by to give us the origin of Boeing's latest woes.
We've been counting down the days to having him join us. And Prince's one-of-a-kind purple piano. It exists. We'll explain why it's on our radar on this Friday.
Hey, first up, let's get a check on the day's trade and top business stories. Here's Charlie Pellet.
Hi, thank you very much. Do want to add a little more detail, a little more color to the initial headline we brought you just a couple of minutes ago. Yemen's Houthi rebels say they attacked a British oil tanker in the Gulf of Aden with anti-ship missiles. A spokesman for the Houthi armed forces says that the Martin Luanda, that's the vessel, was hit and is on fire. Oil markets right now, we've got West Texas Intermediate crude pushing higher, up 0.9%, back above $78, $78.08 a barrel on WTI. Brent, the global benchmark, above 83.53 for a barrel of Brent, up now by about 1.3%. We're looking at a mixed equity market right now with the Dow and S&P, NASDAQ all trading mixed. The S&P right now, little change, swinging between gains and losses. The Dow holding on to a 69-point gain, up by 0.2%. The NASDAQ Composite Index down 37, drop there of 0.2%. 10-year yield 4.15% with a 2-year 4.36%. Spot gold 2016 the ounce, drop there of 0.3%. West Texas Intermediate crude up 0.9%, $78.03 a barrel on WTI. Bitcoin surging 5.4%, 42,066 on Bitcoin. Well, next up for Wall Street, the Fed decision next week, along with a news conference from Fed Chair Jay Powell. Yes, Bloomberg Radio will have that for you live. The central bank is seen holding rates steady for a fourth meeting. Tiffany Wilding is North American economist at PIMCO.
Even though the Fed, does want to start to ease, they do see inflation down. The way they do it is they're still going to have to try to manage financial conditions. So they probably are going to tell us when they start easing, it's going to be very slow, very methodical, right? And we don't want financial conditions to ease too much. But, of course, the markets will extrapolate as they always do.
And again, 10-year 4.15%, the 2-year now 4.35%. By the way, you can hear more of the conversation on the Surveillance podcast. You can download it wherever you get your podcasts. JetBlue says its planned $3.8 billion merger with Spirit could be terminated in coming days. Shares of Spirit, they are down now by 10%. JetBlue shares, they're flying higher by 3.6%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Charlie just did mention that fuel tanker that was operated on behalf of the trading giant Trafigura Group struck by a missile as it transited the Red Sea in the most significant attack yet by Yemeni's Houthi rebels on an oil-carrying vessel. I'm just taking a look at Brent crude. They've been moving up in the last couple of hours, last hour in particular, now just up about 1.25%. And I'm looking at WTI here back in the United States up about 1.6%. So just watching the energy trade a little bit here.
I do want to note that a spokesperson for the company said that firefighting equipment on board is being deployed to suppress and control the fire. And also, the company remains in contact with the vessel and are monitoring the situation carefully. Military ships in the region are underway to provide assistance.
All right, so that's on our radar. So too are shares of Intel. I'm just pulling it up on the Bloomberg because the stock is down still about 12%, so just pretty much just off its lows of the session, but pretty much at its worst levels. Tumbling the most in more than 3 years. As you know the news, we broke it down last night. They delivered a disappointing forecast. A reaction that CEO Pat Gelsinger said Friday was a bit overblown.
The question is it?
I don't know.
I mean, I would say that too if I were the CEO. of
Yeah,
a
I guess
company.
I would.
You? Okay. Intel's first quarter projection for both sales and profit came in well short of Wall Street estimates. Biggest intraday decline since July of 2020. This outlook, Carol, is sparking fears that Gelsinger's long-promised comeback bid has gotten off track.
Yeah, so let's get to it. Let's talk to our Lynn Dewan. She's managing editor of technology and global cybersecurity here at Bloomberg News, joining us on Zoom in New York City. So Lynn, Gelsinger says the reaction, the 12% decline in Intel is overblown. You follow this company. What's your take on it? Do you think investors have it right?
That is what he is saying, isn't it? And he'd very much like all of the investors who are trading down his stocks to be focused on the quarterly beat instead. But the outlook is all that matters if you're investing in a company for tomorrow. And the problem with the outlook is that it is a rose. It contradicts what Gelsinger and some of the other CEOs in the chips business have been saying for quarters now. They've been promising a comeback. They've been promising a turnaround. They've been promising that they're going to get over this slump of the glut of chips out in the market. And I think investors are just getting impatient, and they are waiting and wondering if that is actually going to materialize.
Where's the glut, though? Because we have some chip companies that seem to do okay. Was it ASML this week, right? Their orders.
I wouldn't even call it okay. I would say ASML
was Blockbuster.
Excellent.
Right.
That kind of set off so much optimism in the sector when that report happened.
So help me out, because we know not all chip companies are the same. So what is it, where do we see the glut, and why is it such a bummer for Intel?
Yeah, it was funny because on the same day that ASML reported, another
was it Texas
company
Instruments?
reported. That's right.
Yeah.
And we were all talking internally about how you reconcile those two stories. They seemed so contradictory, right, on the day. But it's exactly what you say. Not all chips companies are created different. They all cater to different parts of the chips markets. I'll tell you one part of the chips market that's doing just fine, which is the chips market that is catering toward AI and AI compute, right? I mean, that's why, people who are waiting for NVIDIA to report its results, and who knows when that's going to be because they haven't scheduled it, are still thinking, NVIDIA is going to be okay. The others, like Intel, Texas Instruments, who still make chips for industrial processes, for data centers, for personal computers and smartphones, I mean, those are the ones who are still suffering. So there is like this tale of different chip cities and diverging fortunes, with AI being one very big, obvious differentiating factor among them.
Okay, well, let's, our own Ed Ludlow and Caroline Hyde earlier spoke to CEO Pat Gelsinger of Intel, and they talked to him about AI. Here's what he had to say. We're still waiting on Pat Gelsinger's conversation with Ed Ludlow and Caroline Hyde from a little earlier. But basically what he said, Lynn, was that, and this was pretty striking to me, Intel has the opportunity of 100% of the AI market because we're going to have our product offerings on a strong showing up with greater improvement in our accelerator product line, but we're also going to be a foundry. What do you make of what he said?
That's right. It's nothing that he hasn't already said. And even in the earnings call that he spoke at yesterday, he said, we're going to find our footing. I think that was the exact wording he used to investors, is we're going to find our footing on AI. The question around the foundry business that Gelsinger is trying to build and turn around Intel with is nobody knows who its customers are yet. Everybody's waiting for them to announce that first anchor customer that's
a
actually
problem,
going to back it.
Isn't it?
That is right. That is a big problem. And, in the meantime, they're throwing billions and billions of dollars into this foundry business. So what the investors are seeing is a lot of spending, but not a lot of money coming in as a result of that spending. So at the moment, it is an unrealized opportunity. That's what he's referring to in his interview with us.
All right. So you, as someone who follows this sector, and as you said, there are cross currents, folks that are hitting it way out of the semiconductor ballpark, and those who are still struggling. I guess, how do we, first of all, on Intel, do we buy the idea that transforming this company is going to take a little bit of time, and so it still needs more of a runway? Or do you look at it and say, it's had plenty of a runway, it should be doing better than it is?
I thought initially that you were going to ask me whether someone should buy the stock or sell the stock, and then I realized you are basically asking me that question.
I know you can't really do that.
Well, that's going to be this is going to be a short answer, Lynn, if that's the question that Carol's asking.
That's right. Like I think time will tell. I mean, that foundry business could be really fascinating, and as we mentioned in some scoops, like Intel is in conversations with different people in the AI world for some interesting partnerships, and like we'll just have to see what comes of that. The question is, when Gelsinger says we will find our footing, is that going to happen? I don't think anybody, well, including Gelsinger, will know that.
Is that an analyst dance that you're giving us, Lynn?
I mean, to be fair,
I could be in politics, I think.
But to be fair to critics, Lynn, and we got to go. But to be fair, I mean, Carol, that this is Pat Gelsinger has been singing the same tune for quite a while now, and it just seems like investors are starting to lose patience.
Yeah,
exactly right.
Yeah, you definitely see it
That's
in the
exactly
trade
right.
today, down 12%. That's a pretty big hit, no doubt about it. Linda Wan, thank you so much. Have a great weekend. Managing editor of technology and global cybersecurity at Bloomberg News, knows how to kind of dance around a question if she has to, and rightfully so. All right, Lynn, thank you so much. This is Bloomberg.
A working class hero is something to be.
And now to the cover story of the new issue of Bloomberg Business Week, featuring none other than Shawn Fain, the president of the United Auto Workers, who earlier this week made quite a bit of news when the UAW endorsed Joe Biden's 2024 re-election bid. But Carol, that's not why we're talking about Shawn Fain today.
No, it isn't. We're talking about Shawn Fain because after making historic gains for auto workers last year, he's now got his sights set on a company we talked about a lot this week, Tesla.
Well, Josh Idelson and Gabriella Coppola write all about Shawn Fain in the new issue of Business Week magazine, available on newsstands, on the Bloomberg terminal, and at bloomberg.com/businessweek. Josh Idelson is Bloomberg News labor reporter. He joins us on Zoom from Washington, D.C. So, Josh, before we get to what exactly Fain is trying to do and the UAW are trying to do, it's not just Tesla, by the way. There are a lot of companies in the U.S. that are trying to organize beyond the big three. Talk a little bit about the wins that he had last year and how big of a deal it was that he was able to get those concessions for the UAW workers from the big three.
The contract victory that the UAW pulled off this fall has no precedent in the past several decades of the union's history. The union won raises that with cost of living increases will be a third over the next 4.5 years for many workers. Some workers will see their pay more than double if they were previously classified as temps. The union also won some key victories in areas like making it easier for workers at the joint ventures of General Motors and Stellantis to unionize, join the UAW, and join the existing union contract over the coming years. And so this was both a reversal of a trend where auto workers have been losing ground to inflation, and also a big step towards securing the union's future as the auto industry changes. But to continue to do that is going to take a lot more work and, in fact, climbing more difficult mountains for this union.
All right, it sounds like one of those mountains is named Tesla. So talk to us about, he set his sights on Tesla and what his goal, mission, and how he thinks about it.
So the union is trying to organize 13 companies' non-union plants to organize 150,000 workers, double the number of automaker employees that are in the UAW, a union that has lost the majority of its membership in the past several decades. And Tesla is one of those 13 companies. It's a particularly alluring and difficult target. It's the company that is synonymous for many people with EVs. It's the most valuable automaker in the world, but it's a company whose CEO, Elon Musk, has shown that he's staunchly anti-union and willing to put up with embarrassing media and lengthy legal battles in order to get what he wants. The U.S. National Labor Relations Board has found that Tesla repeatedly violated the law in response to prior UAW organizing, including by firing an activist who still has not gotten his job back, now 7 years later. Tesla has denied wrongdoing. Elon Musk has made clear that he would see unionization in the plant as a failure on the company's part.
So how then? Why is it so difficult then for the UAW to organize? Because it's ultimately not up to Tesla as a company and not up to Elon Musk. Why is it so hard for the UAW to actually organize the folks who work at Tesla and get them on their side?
So under U.S. labor law, it is not easy to unionize a big company that is trying to stop workers from organizing. Companies have the ability to use tactics like mandatory anti-union meetings that labor board precedent says are legal when there is retaliation. Although it's illegal to punish someone for organizing, the labor board does not have the authority to hold executives liable or to make companies pay punitive damages. And as we've talked to people, there is a real sense among a number of Tesla employees that if they challenge the company, it could lead to punishment for them or even to shutting down the plant. There are, of course, other employees who don't see a reason to have the UAW. And over the years, the corruption scandals within the UAW have been one of the talking points for Elon Musk and other executives against the union. So Sean Fain has worked hard to distinguish himself from the union's recent past, and he's been quite a vocal critic of the direction that the union was going until he took over.
I kind of know the answer to this because I've read your story, but I mean, Tesla didn't respond, right? So they haven't weighed in on this, at least for you guys.
Correct. Tesla did not respond to inquiries.
So, you know, you've been watching this movement, and, you know, it's really fascinating in the auto industry because I do think, right, they have to be careful because you don't want to, it's a global EV race specifically, and you want to make sure that the U.S. automakers are winners as well, right? That they are part of this market going forward. How does he think about, you know, being fair and making sure that the automakers here in the U.S. are still competitive globally? And just got about 25, 30 seconds.
Sean Fain has argued the U.S. should not be copying Chinese labor standards. There should not be a race to the bottom to try to match how cheap labor may be some other places. If anything, he's suggested to us, it's the fact that China has a strong industrial policy that the U.S. should learn from, and that trade policy has a role here. But also he's working to raise the floor by organizing the non-union companies, which of course would make it easier to continue to win more at the big three in the future so that the union is not an island in Detroit.
Well, we talk about themes to watch. We talk about AI. Definitely we're watching the new class of diet drugs, if you will, or weight loss drugs. And I feel like union organizations, too. This is The Cover. Josh Idleston, thank you so much. He is Bloomberg News labor reporter.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 3:21 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow higher, the S&P, NASDAQ. They are both in the red. We'll throw in the NASDAQ 100 index as well. The Russell 2000, though, holding on to a gain of 0.1%. Small cap shares higher, but right now the S&P down 2, a drop there of just under 0.1%. The NASDAQ Composite Index lower by 47 points, down 0.3%. The Dow up 45, higher by 0.1%. And with just 38 minutes to go ahead of the closing bell, we do have the S&P on track for another winning week for stocks. 10-year 4.14%, with a 2-year that's yielding 4.35%. Gold down $2.50 the ounce to 2018, drop there of 0.1%. And West Texas Intermediate crude up 0.9%, 78.08 for a barrel of WTI. Wall Street is looking ahead to an extremely busy week for earnings news, specifically big technology companies. Nadia Lovell is senior U.S. equity strategist at UBS Financial Services.
We do expect tech to be able to deliver on the earnings next week. Some of our early checks are already pointing to that. So we think that this market can continue to be a grind high. Now, in fairness, the market is not too far from our base case scenario for 5,000 on the S&P 500.
And again, S&P right now is at 48.90 among the tech names reporting next week. AMD, Alphabet, Amazon, Microsoft, and Meta Platforms. Speaking of tech, look at what's going on with Intel today. The stock plummeting by 11.9%. That after delivering a disappointing forecast, renewing doubts about a long-promised turnaround at the once dominant chipmaker. Again, Intel shares trading lower, Intel down by 11.85%. Recapping, S&P trading lower, down 3 points, drop there of 0.1%. The Dow does remain higher, up 0.1%. 10-year yield, 4.14%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, so appreciated. Charlie Pellet there. Well, a gauge of pending U.S. existing home sales rebounded sharply in December to a 5-month high, suggesting the recent drop in mortgage rates is helping to stabilize the resale market. That recent drop, by the way, in mortgage rates also helping to bring sales of new homes in the U.S. past forecasts in December. We got that data yesterday. And in general, we've been thinking a lot about real estate and talking to different voices in different sectors of the industry.
Yeah, some sectors that we've covered in recent days have been office, hospitality, hotel, industrial. But it got us thinking more about so-called alternative real estate assets. We're talking about senior housing, self-storage, student housing, and more. It's top of mind at Harrison Street, a company that focuses exclusively on so-called alternative real assets. The company has $55 billion in assets under management, with more than 500 institutional investors around the world.
Christopher Merrill is CEO of the Chicago-based Harrison Street. He's in town, and he joins us here in our Bloomberg Interactive Broker studio. So great to have you here. We like to start big, broad. It's a new year. How are you looking at 2024 and how it compares to coming off of the pandemic and then even pre-pandemic?
Sure. Well, thank you for having me. It's great to be here.
Yeah.
We look at this year and we're absolutely excited about the alternative segments. To us, this is now sort of the second black swan event we've been through as a firm. We were the first mover in alternative real estate, starting the business in 2005. So we saw how these alternative assets did in the global financial crisis, and then we saw how they performed in the pandemic. So coming out of this environment and going into 2024, what you have is a situation where demographics are solid, they're strong, but supply has been choked off. So many asset classes that you mentioned have a ton of headwinds. When you think about what's happening in student housing, senior housing, medical, life science, tremendous tailwinds right now as demand's increasing, enrollments are up at schools, aging population, and there's no supply. So we look at this as some of the greatest vintage years we're going to see for some time.
I understand that for life sciences, medical, senior housing, student housing, but self-storage?
Yeah.
Isn't there a glut?
It's interesting. Self-storage is a fantastic asset class, and it really is one that you have to look market by market. It's a sort of not in my backyard asset. But the great thing about storage is people use it in good and bad times. It's life events. It's
and also
marriage,
people
death.
never get rid of their
They
stuff.
don't ever get rid of it.
So
In fact, I
uniquely,
have a
Never
few of them.
seen storage
It's
war?
so uniquely
Exactly.
American.
But it's amazing.
But isn't there a glut of it? I mean, doesn't
well,
it
I
drive
think
prices
what the
down?
way we do, how we invest in alternatives, because there's a lot of different ways to invest in alternatives. We like to invest in asset by asset, create portfolios, and then sell to the larger players. So for us, there's a huge demand in owning these assets. It's consistent cash flow, month-to-month leases, so in an inflationary environment, you can really reprice. And so what we like to do is do the hard work, build portfolios, and then sell to those groups that are really trying to get exposure to the asset class.
Isn't it nice that self-storage also has 0 employees, so their overhead is so low?
It's amazing. It's the lowest default asset class. You get about the same rent per square foot as an apartment, but you really don't have a tenant. When someone leaves, you roll it up, you sweep it. So it's a great business, but the challenge with it is it's an easy asset class to build.
Yeah,
so you
that's
have
what
to
I'm
go into
saying.
markets where it's hard entitlements because it's not in my backyard. So you got to find high barrier entry markets. Once you own those assets, fantastic.
What happened during the pandemic to all of those assets?
So what happened, it was fantastic, during the pandemic because at first people were nervous. What's going to happen to student housing? What is online learning? What's going to happen to your off-campus housing environment?
And self-storage particularly.
Yeah.
Right?
I mean, what happened with all these asset classes is just consistent. People that were doing businesses online were using storage facilities. People were, when you thought about people moving, there was more flexibility, so people were starting to move into other markets, right? You saw a lot of remote working, so people were traveling, moving, and so they were using storage.
And student housing, same thing?
Student housing was fantastic because really the students didn't want to be in mom or dad's basement. They wanted to stay in their off-campus apartments.
I saw it with nieces. My daughter wasn't in college yet, but my nieces didn't care if she was on college. I think it was her first year. She was a freshman.
Yep.
And I think after having to stay home for a little bit, was like, I think, very happy to be at least on campus. Had a whole dorm room to herself.
And that's what's happening. You look at the Power 5 universities, enrollments are up. You're seeing rent increases 8 to 10% a year. There's just no supply.
Talk to me about the type of student housing you do, because
Yeah.
not all student housing is created equal. I know that the student housing that
It's
I
all
experience,
posh, Tim.
student housing that I experience isn't necessarily the same student housing that other folks have experienced. So.
It really is a different level of quality than a lot of us experience. But it's
That's
really.
one way to
Is
put
that
it.
what you say?
Well, I mean, it's what it
Does
is.
it come with a beer-soaked couch outside?
Maybe,
A
maybe
beer-soaked
so.
couch outside. in the
I
driveway.
think that the key with the business is it's all Bed Bath parity. So it's like multifamily, but really what it is not Bed Bath parity. 3-bedroom, 3-bath, but it's a real focus on gated, well-lit, safe. Safety's a big issue. So that's really a focus is creating an environment where you are providing safe environment, study rooms, amenities, health clubs, et cetera. So,
but are these student housing? Are these student houses that are multi-unit that are affiliated with a college or university?
So,
or are you essentially building like a huge building of apartments?
So
that
a
is
big
geared
part of our
towards
business, we're sort of the largest owner of off-campus housing. So that's not really affiliated with the university, it's off-campus. But the school loves it because it becomes an amenity of the school. They can say to a student, when you're a sophomore, junior, senior, this is where you can live. So the schools like working with good managers. We also have a part of our business, what we call our P3 business, where we're doing public to private partnerships with universities where we're working with and helping them build dormitory because a lot of these big universities don't have the capital.
Yeah.
So we've probably got 30 to 35 universities that we are actually helping them with their housing.
Hey, security deposits in student housing.
Yeah.
What's the average rate that you actually keep from those? Because these people just destroy the rooms, right?
You know what? It's fascinating that if you provide a nice high quality product and you walk the units on a regular basis and you have the willingness to kick children out if they're not taking care of it and you're billing the parents, actually they're taking very good care of the units. And we have a higher percentage of women a lot of times in these units. And so you're actually seeing it's not the type of thing. And that's when we started the business. It was student housing is an institutional asset class. It's Animal House. There's no way this is going to be institutional. But I think people have seen how the industry has really developed. And it's really become an asset class where insurance costs are lower than multifamily.
Right.
We have better rent growth than multifamily. And you have really sticky, strong demand drivers.
Well, and you have parents who are footing the bill.
And you have parents who are footing the bill. So from a credit standpoint, you think of owning a multifamily versus owning student housing, we have great credit.
Sticky, not because you spilled Jell-O shots everywhere.
I have to tell you, I go and
I hang out with you, Tim.
There's a story there. I've helped my daughter move out, and I am amazed at some of her roommates are like, "Yeah, we'll just leave that in the fridge." And I'm like, "Nope, you're cleaning it all out.
Yeah.
Everything's going to be clean because I want the security deposit back."
That's right. That's right.
I'm a tough cookie.
You're bringing me back, Carol.
Senior housing.
So senior housing.
So senior, yeah.
We're just getting older.
People are getting older, but the challenge is, and there's different ways to invest in senior housing. Is
We're
people,
all getting older, but we
but
also
we're having memory
right.
issues, assisted, dementia. So where we focus is on independent living, memory care, dementia, rental, and private pay.
Right.
We don't focus on skilled nursing. That's more public pay issues. But when you look at what's happening, 5 million people turning 80 by 2030. there is not near enough supply right now. So we're going to wake up in 4 and 5 years and wonder, where are we going to house all of the folks that have memory and health issues? It's almost impossible to take care of a loved one that has Alzheimer's dementia. So it is a very important asset class. It's hard. It's not easy. You need great operating partners. But it's a business that we're very bullish on, and we're seeing occupancies back to pre-pandemic levels right now.
How do you design for that, just in the last 30 seconds that we have?
You know, I think what you do is we have folks that have been taking care of dementia and Alzheimer's repairs for decades. So it's really about what paint colors you use. You know, how do you do carpets? How do you do the right caregivers? And so really for us, it's about choosing great local partners to work with.
I've seen it firsthand, and there's safety issues, so somebody can't just walk out. There's a lot of safety measures in place. Favorite market right now? Geography, real quick.
You know, I think right now we're active in U.S., Canada, and Europe, and so we love all those markets. So for us, if I'm near a great university or near a great hospital system, you know, that's where we want to be. And so we can be really diversified across the U.S. and Europe. And so it's hard to pick a favorite market. We just love some of the fundamentals right now.
All right, gonna leave it there. Real fun. Thank you so much. Have a great trip back home to Chicago.
Thank you.
Christopher Merrill, he's the Chief Executive Officer at Harrison Street, joining us here in our Bloomberg Interactive Broker studio.
What was your student housing like in college?
Like I was here in New York City, so it was some old New York apartment buildings once I went off campus. But it was owned by the school.
Yeah.
Yeah.
Hey,
There were some roaches.
Okay, well, more stories to come. Let's get a check on the latest world and national news. Nancy Lyons is in the Bloomberg 99.1 newsroom in D.C. Hey, Nance.
Hey, Tim. Yemen's Houthi rebels are claiming responsibility for a missile attack in the Red Sea today on a fuel tanker that's operated by Trafigura Group. It's seen as the most significant attack yet by the Houthis on an oil-carrying vessel in the region. A company official says military ships are providing assistance. The latest reading of inflation, the one in which the Fed puts the most trust, shows the smallest increase in nearly 3 years. The Core Personal Consumption Expenditures Price Index, or PCE, increased 2.9% in December from a year earlier. Forecasters thought we'd see a 3% rise. Heather Boucher with the Council of Economic Advisors sees it as a good sign.
Price increases are not going as fast, so we have a new low below 3% in the annual rate of the core PCE. But again, when you look over the last 6 months, both headline and core PCE are hovering at about 2%. So this is really good news. We're seeing this growth. We're seeing this investment. It's delivering for the American people in a way that is strong, shared, and across the country. And we're also seeing that inflation has been cooling.
Heather Boucher spoke with Bloomberg's Balance of Power. The UN's Human Rights Chief, Volker Turk, says last night's Alabama execution of a convicted murderer by nitrogen gas suffocation could amount to torture. Convicted killer, 58-year-old Kenneth Eugene Smith, was pronounced dead after breathing the gas through a face mask to cause oxygen deprivation. The state's Republican Attorney General Steve Marshall says the process was textbook.
To my colleagues across the country, many of which were watching last night, Alabama has done it, and now so can you.
Marshall says other Alabama death row inmates will now likely choose the nitrogen option. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Nancy Lyons. This is Bloomberg.
Bloomberg World Headquarters, I'm Charlie Pellet. We got 20 minutes to go ahead of the closing bell. The Dow higher, the S&P, NASDAQ, all in the red. NASDAQ 100 index also moving lower. Let's head right over to the first word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. That's right. U.S. stocks mixed amid the drop in Intel. The Dow is currently up 27 points. The S&Ps are down 7.5%, while NASDAQ declines by 0.5%. The U.S. 10-year yield at 4.15%. Gold is down 2%. Oil trading in the green, but Bitcoin is higher by 5.2%. Among the main 11 S&P sectors, leaders were consumer discretionary and healthcare. Real estate and tech were under pressure. And leaders to the upside in the Dow, American Express and Nike, while Intel fell 12% after earnings and led to the downside. In deal news, JetBlue warned the deal with Spirit may be terminated. And wrapping things up, American Express rose as much as 8.9% to an all-time high. Live from the First Breaking News Desk, I'm Bill Maloney. Charlie?
Very much, Bill Maloney. Have a great weekend, and to hear live breaking news over your Bloomberg, type SQUAK, SQUA, on your Bloomberg terminal. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It's
the question that drives us.
This is the Drive to the Close
That funky music will drive us till the dawn.
on Bloomberg Radio.
All right, everybody, coming up on 18 minutes left in today's trading session, getting ready to wrap up the Friday trade here, wrap up the trading week, bouncing around a little bit on the equity side of things today. But our next guest says the market is trading in an erratic mode, so it's like you knew exactly the day
Erratic,
it was going to be on. Exactly.
Erratic.
It's kind of what we got today a little bit.
Yeah, I think that's a fair characterization.
Let's get to it with Vance Howard. He's CEO at Howard Capital Management. He's on Zoom from Texas. Hey, Howard, it's so great to have you. Vance, rather, it's great to have you back with us. I think I've done that to you before. You know, you got a name that's got, I could call you Vance or I could call you Howard and it would work. How are you?
I've been called worse.
You and me both. You and me both. It's good to have you here. Happy New Year. It is kind of a bouncing around kind of day, certainly on the equity side of things. I think we get some cross currents when it comes to earnings, some cross currents when it comes to some of the economic data points. Talk to us a little bit about how you are seeing things, because, you know, a bunch of your mutual funds and your ETFs, they continue to really outperform. Tell us about the markets and what interesting trends you're seeing right now.
Well, you know, our proprietary trend indicator, the HC on byline's positive, so that's telling us that the trend is clearly up. And, you know, when I wrote that little article about the markets being erratic, you know, it's just some froth that needs to kind of come off the market. You know, we had a great last quarter of 2023, and then the first 3 weeks going into 4 of 2024 has been really robust and positive. So to have a little modest pullback and some volatility is normal, and it's going to happen. And of course, Tesla dropping 12% didn't help anything either.
Okay, we'll get to Tesla in a second, but I want to know how the proprietary technology that you have is giving you a buy signal, even though you're seeing froth.
Well, you know, even though you got an uptrending market, you're going to still have markets that want to pull back 2, 3, 4% and 5% or whatever the case may be. That's not going to change the trend. The trend's still going to be up, and all pullbacks as we see it right now, as long as the trend's up, are viable. So, you know, any of this froth that wants to work its way off, and, you know, a little bit of sell-offs here and some stocks that are selling off more than others, you really need to take a look at those, because those are going to be some really great opportunities into 2024. I'm very bullish on 2024.
Because of the trends that you are seeing and your trend lines.
Yes. Yeah.
Does it ever go wrong?
Oh, absolutely. It's wrong 30% of the time, but it's usually right 70% also. So it has a good hit ratio. But, you know, Carol, there's so much cash on the sidelines, too. I mean, everybody's sitting on a mountain of cash in these 1 and 3 month treasuries. I mean, my goodness, if any of that money starts to come back into the market, you'll see it move higher.
Where do you think that money goes, though? Because Carol and I have had this debate over the past few months quite a bit.
Yeah.
Is that money going to go to fixed income, or is it going to go to equities? Because it's in cash right now for a reason. And that reason is that these money market funds are paying 5%, and you can still get fixed income around there.
Yeah, well, you can. And let's say you're getting 5% on a money market, but he drops rates. And now you're down to maybe 4.5 or 4 or 3 and 7, 3 and 7/8 or something. But if you think about that, if you're getting 2.5 or 3 on a dividend-paying stock with upside appreciation, all of a sudden that cash becomes a little less attractive, and dividend-paying stocks become more attractive. But the market's also broadening out, guys. One thing that we noticed in the last quarter of 2024 is how small caps started to finally move up. And you know, when I say the trough, that was kind of the trough I was talking about, is because we did very well in the small caps. They ran up, and we're seeing a pullback, but that pullback's nothing more than technical and healthy. That's just a period of consolidation. So lots of opportunity out there this year.
So wait, what kind of though consolidation, or what kind of move to the downside do we need to see to get some of the froth out of the market? And I'm assuming you're looking specifically at the S&P 500, or maybe you're looking at that as well as the NASDAQ.
Mainly looking at the NASDAQ. Okay. You know, the S&P 500 has been trading, you know, quite well. But, you know, when you take certain sectors like the small caps, because of the massive run-up they had in the last quarter of last year and a couple of weeks in the beginning of this year, you know, some of this pullback in small caps are needed and warranted. They just can't go straight up. They've got to sawtooth their way up. So this is a viable opportunity in small caps. And, you know, we saw an explosive rally in the semiconductor index. And, you know, when you have that big of an explosive rally, there's going to be a pullback as people are going to start to take profits. And that's kind of what we mean by trough here, is some of these sectors that have really done really well, you know, they're due for a pullback, and they're viable pullbacks too.
Okay, let's talk Tesla now, because we are just under a month into the start of the year, and already Tesla has lost 26.5% just this year. What are your thoughts on Tesla?
Fortunately, and I'm very grateful, we didn't own any Tesla going into that sell-off. So, you know, so that's great. So we got a lot of cash to work with. It's going to be a great stock to buy down here. And the way to trade this stock, guys, is you're going to see it run up a little bit, and then it'll come back and retest the lows. Then you know that the bottom's pretty much set on Tesla. But it's a great company. I mean, the thing is it's really a wonderful company. And if they start selling cars at 25,000 or 26,000, which they're talking about doing later this year and into next, you'll see a lot of revenue flow back into Tesla. But for a long-term trader or investor, Tesla, I think, is just an outstanding play.
Why do you like it so much? Why do you think it's such a great company?
Well, you talked about selling lower-priced cars. If and nuts were candy butts, we'd all have fun at Christmas, is what I like to say. But, I mean, that has been kind of the goal, and they've cut prices a lot, but that's impacted margins. So, I mean, you feel comfortable enough that they're going to get there.
Oh, I do. And, you know, don't ever bet against Elon Musk. I mean, some people hate him, some people love him, but boy, I sure would hate to bet against the guy, because he's a true innovator, and the guy's young and still got a lot of energy. So there's a lot that he can do with a company like Tesla.
You don't think he's distracted by Twitter? You don't worry about him being distracted by something like our X?
That guy is always going to be distracted by something. That's just the way his mind works. But when he stays focused on something, it usually comes out to be a very good outcome. And he'll be back into Tesla. He hasn't quit running Tesla. He's still all in. I was reading the other day that he'd like to own more of it. But you know, you can't short Elon Musk. I just wouldn't do it.
Okay, what about Salesforce?
Up 6% this year. We just got news that they're going to cut some more workers. They're going to cut about 700 workers, and this is on top of what a year ago they cut their headcount by about 10%.
I love that. I love companies that have recurring revenue, Carol, because this one is great. I mean, they've got a monthly subscription base, so they have recurring revenue coming in each and every month. They don't have to sell a new product every month to keep their head above water. And a lot of what they're doing financially is they're becoming more profitable by reducing overhead, because they've had a lot of activist investors that are really sniffing around and sort of getting on top of them. And so this reduction in sales in their sales force, I think, is warranted, needed. I think that was trough they could get rid of. So I think Salesforce, from a technical standpoint and from a financial standpoint, I think it looks really attractive this year.
So it's interesting. And then your other things that you like is something you've talked about, the small cap or the small, growth area, as well as the Russell. You think that the small cap is an area of the market that you think investors have to continue to focus on and plow new money into? Just got about 30 seconds.
I do. I think you buy that on a pullback, and I think it's pulled back now. Like if you're looking at VBK, you're looking at the Russell 2000, either one, it's pulled back now, where it's a viable opportunity. And as the market spreads out, which it's going to this year, you're going to see other areas like small and mid cap start to move higher and start to regain some traction and look a lot more attractive going into 2024.
Vance, real quickly, 15 seconds. Do you care what the Fed does next week?
Absolutely, I do. And I don't think they're going to do anything that's going to surprise anybody, but yeah, I'm watching the Fed very closely like everybody else.
All right, we're going to leave it there. Always get so much. You pack it in, and so appreciate it. That's Vance Howard, of course. He is CEO at Howard Capital Management, joining us on Zoom from Texas. Just got a few minutes left in the trade, folks, and we've got the S&P down about 4 points, the Dow up about 52, and the NASDAQ down just about 60. This is Bloomberg.
Your company news headlines on Bloomberg Radio.
From Bloomberg World headquarters, I'm Charlie Pellet. Salesforce is cutting about 700 workers, adding to a brutal string of tech layoffs at the start of this year. A source tells Bloomberg Salesforce cut less than 1% of workers a year ago. Salesforce did reduce headcount by 10%. Appfolio shares are surging after the application software company reported fourth quarter results that beat expectations. Shares of Appfolio today, they are rallying by just about 26%. Colgate-Palmolive higher after the household products company reported better than expected volumes driven by both North America and Latin America. Colgate-Palmolive up today by 1.8%. Rival Procter & Gamble up by about 0.3%. American Express shares are higher. American Express says it is sticking to its long-term profit and revenue goals. And with more on that story, here's Bloomberg's Kimberly Adams.
Charlie, American Express forecast earnings for 2024 that topped analyst estimates. It had a revenue surge of 14% in 2023 and a net income increase of 11%. While fourth quarter results fell short of analyst expectations, the company said Argentina's currency devaluation was partly to blame. The company says it's still aiming for annual revenue growth exceeding 10%, though it said it may rise 9 to 11% this year. Some analysts had questioned whether Amex could keep spending what's needed to woo affluent customers and meet its long-term goals. Charlie?
And that's Kimberly Adams reporting. We do have American Express up now by 7.2%. Also higher after earnings, Levi Strauss up now by 1.3%. The clothing chain reported fourth quarter adjusted net income that did beat estimates. Again, Levi up now by 1.3%. Those are our top company stories at this hour, and this is Bloomberg.
You're listening to Bloomberg Business Week with Carol Messer and Tim Stenevec on Bloomberg Radio.
Hey, it's Bloomberg Business Week. Tim Stenevec and Carol Masser live from the Bloomberg Interactive Brokers Studio in New York. In just a few minutes, we're going to head on over to our TV team for our Beyond the Bell coverage. Carol, we got a busy week this week and a busy week next week.
Yeah. I'm already thinking about some of the big earnings that are to come down the pike, right? We're going to hear from what? Apple, Amazon, Microsoft?
Yeah, we got like...
Am I missing? I'm trying to think.
Oh, yeah, there are a ton here. So
yeah.
We have, of course, like 6 of the Magnificent 7 coming next week, but the big ones you mentioned just now, Alphabet, Amazon, Microsoft, Meta Platforms, AMD, Qualcomm, Starbucks, GM, UPS, Boeing, MasterCard, ExxonMobil. That's just a few.
There's a bunch. But I think those big, the Magnificent 7 have been really important because they provided so much momentum, certainly, late last year. But we did, as we just heard from our market guests, there has been a broadening out in terms of where investors are buying. He's still very keen on the small cap space, and that's where he sees some opportunity. He'd like to see some froth taken out of the market, but that, again, to him is just a buying opportunity, especially when it comes to some of those tech names, the NASDAQ names, the NASDAQ 100, or in that small cap space.
Yeah, I mean, I guess the question I have is given we've seen results all over the place.
Yeah. Airlines, good, bad.
Yeah.
Chip sector,
but
good,
what's weird is, it's not weird, it's true, 79% of the S&P 500 companies that have reported thus far have beat estimates. This is according to data from Bloomberg Intelligence. So, you know, the DuPonts that we got earlier this week, and companies like Tesla, right? The outliers that we talk about, I guess they are indeed outliers. They miss, and when they miss big, like Gina Martin Adams told us yesterday.
Well, what did she say? It was like a doubling of what Wall Street was expecting, but keep in mind that the expectations for earnings were like a 1.4% growth, right? And it's doubling, but it's still not dynamic. But it's better than maybe what the street was expecting. So, you know, there's a lot of questions still out there. I think uncertainty and questions about what the outlook is and how does Fed policy play into it. You know, Vance Howard, who we just talked to, right? He said, yep, the Fed and what they do is really important in terms of how I make my investment decisions. And I do feel like increasingly, whether it's a CEO, whether we're talking real estate investing, people are talking more and more about the second half of this year.
Jared Dillian, the author of the new book, former Bloomberg opinion columnist, he said, I don't care who's president. I care who's chairman of the Federal Reserve.
Yeah, I know.
That was interesting.
That was that part of the book where, listen, I'm going to explain some boring stuff, and I'm going to start with something really important.
Boring but important.
The Federal Reserve. Also important is how we end up on this Friday, folks. Over to our TV colleagues we go. The market close, Beyond the Bell, starts now.
Connection lost.
basis, most of them are going to finish in the green. As for the day, the Dow Jones Industrial average higher by 60 points or 0.1%. The S&P 500 lower only by less than 0.1%, down about 3 points, right around that 48.91 level. The NASDAQ Composite down 55 points or 0.4%, while the Russell 2000 is actually going to finish today higher by about 0.1%. And that is actually your outperformer, Carol, on a weekly basis as well, with the Russell up 1.7% here on the week, outpacing pretty much everything by a significant margin.
All right, so looking at the S&P 500, folks, kind of an even split, 271 names to the upside, 229 to the downside. Guys, want to guess what's the best performing name in this 5-day work week that I worked? Do you want to guess what's the number one gainer?
Netflix.
You cheat, man. Yeah, it is Netflix, actually. No,
that was like the story of the week.
All right, the bottom of the pack. Bottom of the pack.
I was like the $200 clue on Jeopardy.
I know. It was like the easy
bottom of the pack.
The easy quiz question on the Bloomberg quiz. What's at the bottom of the pack?
Yeah, I'm really bad at Jeopardy.
Well,
Put that out there.
No, this I would expect you to maybe know.
Why? Because is it a commodity? Is it oil? Is it something related to oil? Is that why you're saying that?
ADM down about 24%.
Oh, commodities.
That,
okay.
yeah, that's a very idiosyncratic story, by the way. But still,
Yeah.
that was really brutal when you have sort of accounting issues from your CFO. But guys, let's take a look at IMAP just to sort of round out the day here to see what sectors did well, what sectors did not. No surprise, tech. Bad. That is the worst performing sector within the S&P, down by about 1 percentage point. That's really led by Intel. Also, industrials off a little bit, so a little bit of risk off there. But energy and healthcare and consumer discretionary, consumer staples, all in the green on this day. It's hard to take a real read from today, except American Express did well and Intel did not, Carol.
I like the bad. Do you have a dog now at home?
Me?
Yes.
No.
Oh, it sounded like bad. Anyway, all right.
No, I have a 9-year-old.
Oh, no, she's good. I know that. All right, let's talk a little bit more about American Express. Number one gainer, Alex mentioned it. Number one gainer in the S&P 500. This went up, about 7% in today's trade, hitting an intraday record high. I don't know if it was a record close, so forgive me that I did not check that.
It is. It's record.
Thank you very much. All right, so Amex reporting fourth quarter profit revenue. It did fall short of analyst estimates, folks, even as the company said it's sticking to its long-term revenue goal. Company is aiming for annual revenue growth exceeding 10%, though it said it could rise 9 to 11%, a little bit of a range, according to a statement that it put out today. All right, this is one, don't talk about it a lot, but it's a top gainer in the S&P 500. Biorad Laboratories, ticker is BIO, and the stock up about 4% here. Heavy volume. Reports mid-February. I couldn't find any news that could move it today, but yesterday it was rated a new buy at Baptista Research. They put a price target of $435.60 and the stock closing at $329, so that's quite a bump up. And then, as I said, the best gainer of this week, Netflix. It was a top gainer again in the NASDAQ 100. It's up about 19% in the past 5 sessions, highest level in a couple of years. I think this is its best week since October of 2022 on that stunning subscriber jump. And analysts continuing to weigh in today, including Citi, which raised its price target to $555 from $500, and the stock closing at $570 and change. Tim, all yours.
Okay, well, you got the gainers, Carol. I got the decliners. I do want to start with Intel, that company tumbling the most in more than 3 years. This after coming out with a disappointing forecast. Perhaps unsurprisingly, CEO Pat Gelsinger said Friday in an interview with Bloomberg that this is an overblown reaction. Shares fell after Intel's first quarter projection for both sales and profit came in well short of Wall Street estimates.
I feel like he's like preaching patience to shareholders.
But how long has he been doing that?
A while.
That's the question, right? And it certainly seems like investors are losing that patience. Looks like investors are going to need patience when it comes to an airline merger that is increasingly looking like it's not going to happen. I'm talking about JetBlue and Spirit Airlines. Shares of Spirit falling more than 13% today. This company's been on quite the ride over the last few weeks. JetBlue warned that its planned $3.8 billion acquisition of Spirit may be terminated in the coming days, setting up a possible clash between JetBlue and Spirit over the deal. Spirit did push back later in a separate filing, saying it, quote, believes there is no basis for terminating the deal, saying that Spirit will continue to abide by all of its obligations under the merger agreement, and it expects JetBlue to do the same. And finally, to a company that reported earnings after the bell yesterday, KLA Corporation shares falling as much as 5.4% earlier in the day, finishing, though, down by 6.6%. This after the company provided guidance for the third quarter adjusted earnings per share and revenue that fell short of estimates, this at the midpoint.
All right, guys, I want to check in on the bond market real quick because it's macro, so, you know, we got it. And we got a lot of macro stuff for next week. We are seeing a sell-off in all across the curve today. It's the 2-year, though, that's really feeling it, particularly as you get the core PCE actually did relatively well. By well, I mean sort of move around to that 2% level that the Fed looks at, up by 6.2%. But, you know, remember, we're talking about it. It still feels like an orderly bond market. There's a huge range that many analysts wind up seeing, but it still feels like an orderly move and an orderly sell-off.
Yeah, there's definitely been a little bit more muted. That obviously could change a lot when we get to Wednesday and we actually get the Fed here. And that really gets us to the heart of the issue here, that this is a market now that has really kind of been left to its own devices for like the last 2.5, 3 weeks or so here. That changes in a big way next week with the Fed, and it changes in a big way next week with that slate of earnings, including from 5 of the Magnificent 7 stocks.
Yeah, that's going to be big. And of course, we've got the Fed meeting, and then we've got another read on the labor market. Having said that, let's talk a little bit about labor, because I know we've seen some layoffs, right? We've seen it with Salesforce. We've seen it also with, what am I thinking?
There are a ton of companies just coming out today. Flexport, according to the information, says it's going to cut several hundred roles. We saw Levi's jumping because of a job cuts announcement.
Microsoft.
Polestar is cutting roles. I mean, they're few. They don't seem few and far between anymore right now. And I think right now it certainly is anecdotal, Romaine. But you know, there's still. You know, Goldman Sachs is tracking it with a layoff tracker.
Well, and if you go, and there's some great layoff trackers out there that you can use online to show that there has been an acceleration in these. I think what's interesting, too, is some of the announcements that we've gotten this week, and don't forget some of the media sites that also announced layoffs here. I think the percentage of workers that are being laid off is more significant now than what it was, I think, when we were talking about this a couple of months ago. It seemed like before you was talking about low single-digit layoffs in terms of total number of employees, and now we're kind of at that high single digits, low double digits, and I think that's when you have to get concerned about how that feeds into the macro story.
Yeah, and then where that labor hoarding is, right? You can make an argument that some of the railroad, those guys, they're not going to be laying off workers anytime soon, because it was very hard for them to get it. So there's that aspect too. What I want to bring in is the Journal had a really interesting article that said that a lot of the workers that are working remotely are more easily laid off than those that come into the office. Now, we've all been in the office since, what, July of 2020? But nonetheless, I found that to be very interesting. Is that true? July 2020?
Yeah, some of us have been here longer than that, Alex.
Something like that. They wouldn't let me come in.
That's a whole nother conversation.
They wouldn't let me come in.
Tim, I don't think you ever stopped.
They told me I got a job and I had to come in that day.
Must be nice. But yeah, your point is, but I saw that story too, and it makes you wonder here how that's going to shake out. Is this sort of that end of that remote work, hybrid work environment, particularly if now they're going to hold it against those folks at home?
I think it's more of a question about stability. You know, people who are willing to work remotely for different reasons, lifestyle reasons, they want to live where they want to live. And they spoke to some of these folks in the article who said, you know, it's okay to have this uncertainty as long as I get to do what I want to get to do, which is, you know, live in these other areas. So
I think it's going to be tricky. There's a lot of employers who come in and companies that come in and talk to us, and they say we want to be able to, that workers want that flexibility of maybe being in the office or being at home. So
wait, how do you get to work 4 days a week?
I didn't. I worked 5 days, guys.
Okay. All right.
And you're late.
I support you, Carol.
Thank you. I know you're with me. All right, that's a wrap. Goodbye to the three of you, not you, Romaine. All right, that's a wrap. Our cross-platform coverage, wrapping up the trade.
1, 2, 3. Okay.
Don't do the math.
I don't know what's happening over there.
Wrapping up the trade on this
Because you started
Friday
the wine
and for
segment
the week.
earlier.
I hear nothing. All right, join us again on Monday. We will all be here. Our cross-platform, radio, TV, YouTube, Bloomberg Originals.
Actually, no.
No, turn his mic off. Turn his mic off. All right, guys, we'll see you on Monday.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenevec on Bloomberg Radio.
All right, everybody, we are continuing here on Bloomberg Business Week. It was a busy 5-day week. It wasn't a long weekend for all of us or any of us. And we also had a lot going on. The New Hampshire primary, earnings from some of the big ones, including Tesla, Netflix, Intel, and a few more. And quite a lot of economic data, Tim. Fourth quarter GDP growth significantly beat estimates. Core PCE slowed to an almost 3-year low. Personal spending topped estimates. And then, of course, we're looking ahead, the first Fed meeting of the year, and that happens next week.
You're talking about a lot of stuff in a very short period of time.
Yes, indeed.
It's the backdrop for Wall Street Week with David Weston. It's coming your way at 6 p.m. on Bloomberg
He's
Television.
the one who's got to make sense of it for everybody as we head into the weekend.
He is. So, David, you are trying to make sense of this for your viewers, for your listeners this evening. You've got a great lineup of folks who you're speaking to. What's top of mind for you as you go into the program tonight?
Well, obviously, we're going to be talking about the markets and what they've been doing and how you can really invest into a rising market. We're also going to talk a lot about credit with Purnima Puri of HPS. But one of the things we've been really trying to focus on is this election that's coming up and what difference it's going to make for global Wall Street and people in business and in economics. As we know, we've got a fair amount of debt in this country, and we're running a pretty big deficit. We're over 100% now GDP in the debt. We're approaching 6% in the deficit. So we thought we'd go back and talk to somebody who had actually addressed this problem in the past. He's Bob Rubin. He was the Treasury Secretary and President Clinton's chief economic advisor, really, who sat down with President Clinton when he came into office. President Clinton said, we've got to address the deficit as a threshold issue. And if you remember, they put together a plan in 1993 that ended us up in a place where some people were worried we would go out of the Treasury business because we wouldn't have to borrow any money. Well, we're far away from that. So we asked Bob how bad this really is and how they got out of it then, what we could learn for today.
I think we're in a terrible place, David, because unfortunately, once you get to legislating, there isn't the will. There's a lot of talk, but the talk is always divided politically between the Republicans who refuse to raise taxes and the Democrats who won't deal with entitlements. Now, I think there is a reality to this, and that is I do think when we eventually get to doing this, or if we're going to do it after the next election, which the good Lord would hope we will, but I wouldn't bet on it, about 60% or something of the increase in the debt from 2000 to 2022 was because of the tax cuts. So if it hadn't been for that, the debt, instead of being 100% GDP, would be about 60%. Another way to look at it is exactly what I just said, which is what percentage of debt, what percent would the debt be of GDP if we had the two tax cuts? And you come out to about the same number, around 63%, something like that. So I think in very large measure, what happened is we had two very big tax cuts, neither of which were paid for. So we decided not to pay for what we were spending, and that's how we got where we are. But looking forward, we're going to have to deal with both spending and taxes. So I think for the reasons I just said, when you get realistic about it, I think you're going to have to be largely on the tax side.
So that's Bob Rubin, and he went back to 93, and I mean, you two are too young to remember it. I can still sort of remember it. When they addressed it back then, it was 50-50, basically, tax raises and spending cuts. They really divided it down the middle to address both things. He thinks now, actually, you have to raise taxes even more. But as he said, neither side seems to be willing to do anything.
Well, and why this is so important, we obsess about what the Federal Reserve is going to do, and there's just so much they can do in terms of interest rates. But if you are running or continuing to run a high fiscal deficit, well, then the government's going to have to sell more treasuries to pay for this, and that is going to put a floor under rates.
And one of the things I asked him about was, what does this mean for the neutral rate? We all talk about the neutral rate. If you keep running these sorts of deficits, does it increase the neutral rate? He said, yes, over time it does. The problem is, for some period of time, the market doesn't react immediately, and then when it does react, the word he used was it reacts savagely. And the analogy he drew actually was to Greece. He said there's a real imbalance in the marketplace right now because it's not reflecting all the debt and deficit. And when it does come, it could be really brutal.
Which is amazing for all of us who did report on the Greek crisis, and just say, to think that the U.S. could be even compared to something like that is pretty remarkable.
I want to go back to this idea of actually raising taxes because in the modern, political world, well, you bring up a really good point. I mean, this is like the third rail for politicians. No politician wants to be seen as raising taxes, but I think he makes a really interesting and I think solid point that, look, we can't just keep cutting taxes, especially if they're not going to pay for themselves. Actually, earlier today, Jamie Dimon came out and said that the rich should pay more to fund lower income tax cuts, which I thought was a really interesting thing to hear in light of your conversation with the former Treasury Secretary.
Yeah, that was what I read about what Jamie Dimon said. It was more redistribution. Yeah. Let's tax the more wealthy so we can help the poor, which a lot of people think there's a lot of sense to because of the inequalities. But we have to remember back in 92, Ross Perot had run for president, and he was on fiscal conservatism trying to save some money. And remember, that's where James Carville, who was also one of the senior advisors, he came up with a great quote about, I used to think if there were reincarnation, I'd like to come back as the Pope or the president. Now I want to come back as the bond market because you can intimidate everyone. Because the bond market gave them a big nudge back then because the bond market was really reacting. And Bob Rubin said one of the things that they saw was corporate confidence, business confidence had really plummeted because they didn't think the United States government could really take care of its fiscal situation, and that came back. Once they made those cuts and they really raised some revenue and cut some spending, he said it really came back, and that drove productivity, and it was, we had a pretty good session after that in the 1990s.
So any hope for, in terms of his perspective of us getting it right? Doing the right thing?
I wish I could tell you he thinks it's about to turn around. If anything, he said the reverse, because he said that the politics is not there now. At some point, we'll get there. The concern I think a lot of people have is it won't get there unless there's a true crisis, and that will be really ugly and really unfortunate.
Right.
But part of it is, I think, trying to have a plan for when it does happen. When you're trying to do these things, you want to say, if it does happen, do we have a plan on how to deal with it?
Well, if it's left up to Congress, that might be a little complicated, right?
No, exactly. Congress doesn't
What are you
have anything
saying?
to do with it.
What are you saying, Carol?
No, but it's interesting because I think about the discussions we have on a regular basis, and I remember years ago that we would always talk about the deficit, and it kind of gets pushed to the side, and now it's coming back again, but it doesn't seem to dominate, but it's an important problem.
Well, let me give you one perspective.
Yeah.
We have Social Security and Medicare. There's a trust fund. It's going to go bankrupt about 9 years from right now. Under the laws as currently written, if that happens, because we're not raising the withholding on our pay to pay for the Social Security Medicare, there will be an automatic 23% cut in every Social Security recipient's benefits. And you can imagine what that will do across the country, because there are a lot of people who live off those Social Security payments. It would be brutal.
It's not setting it up to be very...
I'm making you feel good about this, all right?
Yeah.
Do you have anything, upbeat there, Mr. Weston?
Well, the markets are doing fine.
But the problem is that not everybody's in the markets. A lot of Americans are. But if you, like you say, that for a lot of Americans, ultimately, when they retire or as they get older, they rely on those payments.
Yeah, and I listen, this is just me talking now, but I have to wonder if Americans tend to be smarter than we give them credit for, particularly the politicians give them credit for. They know that this is not sustainable deep down. I mean, they know basically we can't keep doing this forever. It's not going to work. And that gives rise to some of the anger, I think, that you're seeing in the electorate.
Yeah, absolutely.
Okay, speaking of the electorate, you're doing Wall Street votes. You're talking to a lot of executives about what the election looks like. We've been doing the same thing here because it for us it really got real this week with New Hampshire. How are you thinking about it?
It's so funny. I went to lunch with some folks that you know off of Wall Street, and all they wanted to talk about was this.
Really?
Said, what do you think the business community's reaction? I said, well, you're the business community. What's your reaction? And we had an entire discussion over lunch about exactly what this meant. I mean,
it's top of mind.
It really is. At least as I talk to people who are involved in business and the financial markets, they are really focused on this. I must say, I don't get a lot of answers. I mean, what I hear is, boy, we have a lot of problems with what President Biden did. We don't think he's been very pro-business. There are issues about his age, as we've all talked about. On the other hand, they think the uncertainty of a Donald Trump, even if they liked a lot of the policies he had before on taxation, on regulation, less government, they like those sort of things, they recognize there is a real volatility, if I can put it that way. Our president, you don't know where he's really going to go.
And a real worry about the guardrails not being there as they were maybe the first time around.
Exactly right. I mean, just from the accounts we read, he thinks that was the nice Donald Trump he got last time. This time, he's going to really get his way.
All right, looking forward to it, as always. Wall Street Week coming your way at 6 p.m. Wall Street time. David Weston, thank you so much. This is Bloomberg.
From Bloomberg World headquarters, I'm Charlie Pellet. Turned out to be a mixed Friday, winning week for the U.S. stock market. S&P 500 index up again, up 3 in a row, up today by another 1.1% on the week. Today's number, a loss for the S&P, down 3 points, a little change, down less than 0.1%. Finishing the week, heading into the weekend at 4890 on the S&P 500 index. The Dow had an up day, up 60 points, higher by 0.2%. NASDAQ down 55, drop there of 0.4%. West Texas Intermediate crude oil today up 0.8%, 77.98 a barrel. 10-year yield 4.14%. The 2-year 4.35%. Gold, little change, down 0.1%, 2019 for an ounce of the precious metal. Intel hard hit today after earnings. Intel shares down 11.9%. It delivered a disappointing forecast last night, renewing doubts about a long-promised turnaround at the once dominant chip maker. Again, recapping, it was a down Friday. It was an up week. On the week, the S&P up by 1.1% today. The S&P fell by less than 0.1%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. Really appreciate it. Well, shares of Boeing have shed more than a fifth of their value since the beginning of the year. Much of that in the wake of the near calamity on a 737 MAX 9 flight operated by Alaska Airlines earlier this month. That prompted authorities to ground the model and step up security of the company's manufacturing. And Carol, now the chorus of Boeing critics has grown louder as more top airline execs have called out the plane maker over a series of quality lapses that have upended the operations of a number of carriers.
All right, well, we've got the guy who literally wrote the book about how Boeing got to this place. Very pleased. We've been looking forward to it all week. To welcome our colleague, Bloomberg News Projects and Investigations reporter, Peter Robison. He is the author of the New York Times business bestseller, Flying Blind, the 737 MAX tragedy, and the fall of Boeing. The book, by the way, a behind-the-scenes look at the dysfunction that contributed to one of the worst tragedies in modern aviation. Of course, the 2018 and 2019 crashes of the Boeing 737 MAX. Peter, Tim, joining us on Zoom from our Seattle bureau.
Hey, Peter, good to have you. Look, we've been thinking about you a lot in the last few weeks because a lot of the discussion over what happened on that Alaska Airlines flight has had to do with manufacturing flaws in the culture at Boeing. And I'm wondering if anything that we've seen from Boeing this month, from the actual door plug blowing off to the grounding of the planes to the chorus of executives venting their frustration, has any of that surprised you?
I think what happened didn't surprise me, and in my book I actually wondered what the prospects for Boeing would be if there were another MAX accident, because I wondered in the book if Boeing's reputation could survive it, and I think we're seeing the answer to that in real time. There's real disappointment and frustration that Boeing hasn't ironed these problems out, and I wrote in the book about how the culture had shifted over many years, and what happened after the crashes was that the management basically remained in place. Dave Calhoun, who'd been on the board since 2009, stayed in place. So what you're hearing from many people, from Wall Street, from Congress, from employees, is that there needs to be a true shakeup of the management ranks at Boeing.
All right, just a moment, folks. We do want to bring an update on a headline. We talked earlier about that fuel tanker that was struck by a missile as it transited the Red Sea. It was the most significant attack yet by Yemen's Houthi rebels on an oil-carrying vessel. The oil tanker hit by that missile was carrying Russian fuel, so we just did want to give an update as those big tankers and those big ships are trying to navigate the Red Sea as this conflict continues on.
Let's get back to Peter Robison, the author of the New York Times business bestseller, Flying Blind, the 737 MAX tragedy and the fall of Boeing. So, Peter, you talked a little bit about the lack of a culture shift following the first two 737 MAX tragedies in 2018 and 2019. But I'm wondering how far back we have to go to understand a culture shift that happened at Boeing when it turned from a company that was really focused on engineering to one that was focused on financial engineering. When did that happen?
You have to go back a very long time, and it may seem like events from the late 90s and early 2000s cannot possibly be related to something happening now, but the aircraft business is such a long cycle business, and it takes so long for these aircraft to be developed and then produced. And what happened was that Boeing bought McDonnell Douglas, which was really the also-ran in commercial aircraft production. and many of the McDonnell Douglas executives came into high ranks at Boeing, and that included Harry Stonecipher, who'd been an executive at General Electric and was really a disciple of Jack Welch, and took the approach that what matters is return on net assets, what matters is the balance sheet. And Stonecipher was actually one of the main proponents of selling off what was then called Boeing Wichita, which makes the fuselage for the 737. And the reason was that it would lower Boeing's costs. And at the time, there were many people warning Boeing that you would lose control of your production system, that you needed to have insight into what was happening at the very lowest levels of the production system. And it appears that what those people had worried about has now come to fruition, because the problems on this MAX plane were apparently, if a whistleblower who wrote on an aviation website what happened, it appears to be poor work by the supplier in the now independent company in Wichita, and rework at Boeing, and miscommunication. And Boeing lost control of its production system as it tried to sell it off and save costs.
Well, it's like a shark circling the waters, the bloody waters, those being the ones that Boeing is swimming in. And, we had a headline today about Airbus looking to persuade customers to return some aircraft delivery slots that it could then hand over to United. And they're basically going out, all out for the rare chance to snatch a marquee order away from Boeing. Like, it's getting nasty. So what does Boeing need to do? Does it need to be nationalized? I don't know. How are you looking at it?
I think bringing in a management team that truly puts safety and quality first, was raised with that approach. Maybe they do need to bring in a team from an entirely different company that can look at things with fresh eyes, because the team at Boeing, although it has talked a very good game since the ouster of former CEO Dennis Muhlenberg, is a team that traditionally had put schedule first, and as the attention shifted away from Boeing, again, that emphasis on schedule first came to the fore at Boeing.
Peter, what about making sure an engineer is an executive at the company, is a CEO of the company? We have had this moment where the last few CEOs have had backgrounds that have not been engineering backgrounds. And I mean, this place used to be the gold standard when it came to American aviation, when it came to American ingenuity, when it came to American engineering. There's certainly been a brain drain. We've reported on that in the past few years out of Boeing. But what's the importance of having the person at the helm being an engineer?
Well, ironically, Dennis Muhlenberg was an engineer and was proved unable to communicate to the public what Boeing was doing. The one that got away at Boeing, though, is really Alan Mulally, who could have been the choice for CEO, even going back to the early 2000s. And instead, he went to Ford and turned around Ford.
Wow.
All right. So what do you think needs to be done? Because, it's interesting. If indeed United somehow, changes where it wants to buy its planes, I mean, that would be a huge loss, right? And a huge sign to Boeing and really the overall industry.
It would. Boeing is hanging on to its now 40% share of the narrow-body market, and that's a complete turnaround from when I started covering Boeing in the late 90s, and it was an icon. It could seemingly do no wrong. It had 60% of the narrow-body market, and it gradually sort of followed the same path as McDonnell Douglas, and that path was failing to invest in new aircraft, in modern technology. And the way forward for Boeing is to invest, is to believe in commercial aircraft. And the 737 is failing in the marketplace, not only because of the quality problems, but because the A320 simply has more modern avionics. It has a more modern crew alert system, and buyers ultimately see that. But Boeing is protected in some ways because there are only two manufacturers, and Airbus's production slots are essentially sold out. But as you're describing, it's still finding ways to maneuver around that.
Peter, going back to what I asked is, like, does Boeing need to be nationalized? Because it is the largest exporter, right, for the United States. This is an important company.
Huge defense contractor.
Huge defense contractor. Just got about 30, 40 seconds left. Is there some role that the government needs to play? I mean, it kind of turns capitalism, upside down, but I'm just wondering.
I couldn't say whether Boeing itself needs to be nationalized, but what is true in this case is that the FAA is taking a much more active role in overseeing Boeing, even to the point of limiting the production expansion that Boeing plans. And that you could say is a form of nationalism in that the regulator is telling Boeing it cannot expand unless it's satisfied that it will do so in a safe manner.
Yeah, it's really fascinating after, so many years of just trying to get the 737 MAX, back in, operation, and then to kind of come out and look like things were getting better, and then to find themselves here is just kind of staggering. Yeah, it's just amazing.
Yes.
Peter, really great. We've been hoping to get some time with you and so appreciate it. So thank you, and have a great weekend. Bloomberg News Projects and Investigations reporter Peter Robison joining us from our Seattle bureau.
Check out his book, Flying Blind, the 737 MAX tragedy and the fall of Boeing. Let's get a check on the latest world and national news with Nancy Lyons in the Bloomberg 99.1 newsroom in Washington, D.C. Hey, Nance.
Thanks, Tim. Well, the jury has reportedly reached a decision in the penalty phase of former President Trump's civil defamation trial. The verdict will apparently be read soon. Trump walked out of the courtroom earlier as writer E. Jean Carroll's attorney began her closing arguments, but returned when she was finished. A jury found him liable last year, sexually abusing Carroll in a department store dressing room back in the 90s, and then repeatedly calling her a liar when she spoke out. This jury is determining how much he should pay the writer, if anything. A fuel tanker is burning in the Red Sea after being hit by a missile strike. Bloomberg's Kaylee Lines reports the ship is owned by trading giant Trafigura Group and was carrying Russian oil.
This is the most significant attack against an oil energy carrying vessel we have seen so far just with this conflict in the Red Sea. The Houthis have claimed responsibility for attacking this vessel. And of course, this is just one of many attacks we have seen really since November when they began these attacks on commercial vessels.
Bloomberg's Kaylee Lines reporting the Houthis have launched nearly daily attacks on vessels transiting the waterway in an act of solidarity with Palestinians amid the war between Israel and the militant group Hamas. Well, the International Court of Justice is demanding Israel take steps to prevent acts that some see as genocide against Palestinians. But it did stop short of ordering an immediate ceasefire. The preliminary ruling was not well received by Israeli Prime Minister Benjamin Netanyahu.
Israel has an inherent right to defend itself. The vile attempt to deny Israel this fundamental right is blatant discrimination against the Jewish state, and it was justly rejected.
Netanyahu says it's Hamas that's a genocidal terror organization. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Nancy Lyons.
From Bloomberg World Headquarters, I'm Charlie Pellet. Mixed Friday, up week on the week. S&P 500 index was up 1.1% today. However, we saw the S&P lower, little changed. Ended Friday with a loss, down 3 points today, down by about 0.1%. Dow Industrials up 60, up 0.2%. The NASDAQ Composite Index down 55, a decline there of 0.4%. 10-year yield 4.13% with a 2-year 4.35%. Spot gold down $2 the ounce to 2018, drop there of 0.2%. Crude up 0.9%, 78.08 a barrel. So a mixed Friday. As for the overall market backdrop, Vance Howard is the CEO at Howard Capital Management. And right here on Bloomberg Business Week, he told us he would like to see some froth come out of the market. And when it does, he'll be buying on the dip.
All pullbacks as we see it right now, as long as the trend's up, are viable. So, any of this froth that wants to work its way off, and a little bitty sell-offs here and some some stocks that are selling off more than others, you really need to take a look at those, because those are going to be some really great opportunities into 2024. I'm very bullish on 2024.
And you can hear the full interview on the Bloomberg Business Week podcast. 10-year 4.13%. Spot gold down $2.50 the ounce. Crude West Texas Intermediate up 0.9%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, everybody. Thank you so much, Charlie. Just crossing the Bloomberg terminal, the punitive damages, the damages coming down in the defamation case against former President Donald Trump, and it is determining that he must pay $83.3 million for defaming E. Jean Carroll. The jury determining that those damages in total. Remember, the New York writer E. Jean Carroll defaming her when he denied her claim that he'd sexually assaulted her in a Manhattan department store. That was back in 1996. But that is the big headline. The former president being determined that he must pay $83.3 million for defaming E. Jean Carroll.
The award was handed down Friday in a Manhattan federal court after a trial that spanned 2 weeks. Carroll testified that Trump shattered her reputation and put her life at risk when he falsely claimed the assault never took place, which unleashed waves of online abuse and threats by his followers. It was a panel of 7 men and 2 women. They deliberated for about 3 hours after hearing from several witnesses, including Trump and Carroll. The award, as you mentioned, Carroll, includes $18.3 million in compensation for harm caused to Carroll's reputation, plus $65 million in punitive damages from statements that Trump made while in the White House.
All right, so $18.3 million in compensatory damages, $65 million in punitive. That's a total of $83.3 million for defaming E. Jean Carroll. Again, this just crossing the Bloomberg terminal. The former president returned to court after about 45 minutes to hear a closing argument from his own lawyer, but his absence was a jarring start to the final day of this trial. Jurors have began deliberating to determine how much, if anything, that he would pay. But again, we're getting the big headline coming down again just to confirm $83.3 million that the former president Donald Trump must pay for defaming E. Jean Carroll.
I want to bring in Jody Schneider from Bloomberg News, Bloomberg Politics down in Washington, D.C. Jody, good to have you with us this afternoon. Your reaction to seeing just what I think many would agree is a huge amount of money that the former president must pay former Elle magazine columnist E. Jean Carroll.
Yeah, it is. It's more than we had anticipated. $83.3 million is a lot of money. It has been a long kind of process here. Obviously, this was only the penalty phase, but the former president did show up and showed up regularly, even though he didn't have to in court here. And he tried to make this sort of a part of his campaign, actually, in a way, by saying that he has been targeted. He didn't know her. Even though this was only the penalties, he was very concerned about the image of this and tried to also make it part of his argument, as in other cases in which he's charged. This was it's separate from them, but that he was being targeted, he was being victimized. This is something that he has kind of gone from the campaign trail to the courthouse about. Question will be, will this matter to voters? It hasn't seemed to so far, but it's another headline from another courthouse involving the former president.
All right, just the headline. A New York jury finding Donald Trump must pay $83.3 million to former Elle magazine columnist E. Jean Carroll for defaming defaming her when he denied he sexually assaulted her. It is the latest legal setback for the former president as he campaigns to return to the White House. Keep in mind that this jury, right, they could have determined that he didn't need to pay anything. So they ultimately went with a pretty high figure. I'm not a lawyer, but it feels like a lot of money. We want to bring in Bloomberg Politics contributor Jeannie Sheehan-Zaino. She's here in our studio. Jeannie, there's a legal side to this story in terms of the judgment, how big it is. There's the political side of it. When you hear this news, what's top of mind for you right now?
You know, what's top of mind is how strange this is. I was just in Manchester, New Hampshire with so many people from Bloomberg, and Donald Trump had an enormous victory in the Republican primary, so much so that the RNC considered making him the presumptive nominee after the 2 races in Iowa and New Hampshire.
Skipping the process.
Skipping the other 48 states. And this is the same man who hours later, I mean literally hours later, got a judgment against him for libel and sexual assault in the over $80 million range. So, you know, if you had asked me, quite frankly, a year ago, if we'd ever be sitting here having this conversation, the answer would be absolutely not. I agree completely with Jody. It is higher number than I think many of us thought. But just my first reaction as a political scientist is this man is very close to the White House at this point, and he is also convicted. And oh, by the way, this is just one of many court cases he's facing.
Yeah, that's a very good point, Jeannie. Hey, I want to bring Jody Schneider back in here. She's Bloomberg Political News Director. Jody, what do you make of what Jeannie said? It really struck me because, you know, at a certain point you have, you know, the former president paying $83.3 million. That's on one hand, or being forced to pay that, being told he has to pay that. On the other hand, you have somebody who won overwhelmingly in the first in the nation primary earlier this week in New Hampshire. What is the political implication of this? Does it make voters think differently about electing Trump to a second term?
It's a really interesting, fascinating split screen, certainly, and we've never been in quite a situation like this before, have we? But that's the question. Voters to this point have seemed to almost take it in stride that the president has been on the campaign trail and in the courtroom. But a number of them, and in polling, have said that if he was convicted of a crime, that they would have to think twice about voting for him, and particularly when asked in some of these cases, the one involving the classified documents, involving election interference in Georgia, involving the January 6th issues, the case that's going to come up in D.C., those give people pause if he was to be convicted in those. I haven't seen much polling around this in particular, but certainly it is part of his legal troubles, and it is something that concerns some people. The base, will it matter to the base? Probably not. They've already said that they are, standing by Donald Trump. The other thing is Donald Trump is very, very good at using moments like these to make his case that he has been victimized by the system, and that they are just trying to stop him from running for president.
One thing that I'm curious about, so $83.3 million that this New York jury has found that he has to pay for defaming E. Jean Carroll. Those are the damages. Jeannie, what do we know about, I'm curious about his base, how they would feel if political donations go to pay for this. Can that happen? I have no idea about the law and the rules of whether or not that he can use politically donated money to pay for this.
Well, his political donations so far, a lot of them have gone to, now I'm not saying specifically to pay off a debt like this, but for legal reasons, for lawyers and others, witnesses, not witnesses, but people that are hired witnesses. So he has used money in the past. He has raised an awful lot of money off of these court cases. Right. In fact, he has probably, and I don't have the details on this, but arguably spent as much time in a courtroom now as he has on the campaign trail, not even campaigning as a traditional candidate, but going back and forth from court cases. So it has been a fundraising juggernaut for him so far.
Trump, the former president, Donald Trump, facing, I believe, still 91 felony charges, 4 separate cases ranging from conspiracy to defraud the U.S. in his efforts to overturn the 2020 election laws, to falsifying business records to cover up hush money paid to an adult film actress. There's a lot still going on. I want to bring in Bloomberg legal reporter Eric Larson, because Lots of questions, Eric, but I do wonder, can he use political donations to pay this award, or this award to Eugene Carroll?
I honestly don't know. I honestly don't know if that's something that he would be able to do. My understanding is that he has pretty free reign to use his legal war chest how he sees fit. But I haven't heard one way or the other on that.
Hey, Eric, is this something that look? It's I think a staggering sum for a lot of observers out there. $83.3 million that a jury found that former President Donald Trump must pay to former Elle magazine columnist Eugene Carroll for defaming her when he denied he sexually assaulted her. Is this money that he's going to have to pay at this point, or is there an appeals process that could play out, or is this final?
Well, there'll definitely be an appeal. I'm sure he will appeal this. You might recall that there was a related trial last year between these same parties in which a different federal jury found Trump liable for sexually assaulting Eugene Carroll, which, of course, is the underlying issue here. And they awarded her $5 million in damages in that case. And Trump has appealed, but he also put up actually $5.5 million to the court to hold while he appeals. So I would imagine that it's the same court, federal court in Manhattan. They'll probably end up doing something along the same lines because once you are hit with an award like that, you do have to sort of put it up. It may not go to Carroll right away, but he's going to have to put that money up.
Jody, you're still here with us. I am curious, the longer this stuff goes on, the longer he has to appeal or fight. Again, does that play anything into his political strength going forward, or does it help him the more he has to fight stuff? Or I'm just curious in terms of how this plays out leading up to November.
So far, and it may seem to defy logic, but so far his legal troubles have not seemed to hurt him, and among certainly some of his base, but maybe even among other Republican voters who want to see change in the system. He has actually been able to use this as a tool for fighting Joe Biden, saying Joe Biden's Justice Department is behind this. He wasn't able to say that in this case, but he has been very effective at using this as a campaign issue. And we will have to see, though. I think at some point there may be some fatigue with this, and people may be saying, do we want to have as president somebody who has spent more time in the courtroom this year than campaigning?
Well, that's what I want to ask Jeannie Shanzano, Bloomberg Politics contributor, who's still with us as well. Jeannie, maybe it doesn't deter his base, but primaries are won thanks to bases. General elections are not won thanks to the base. The general election in the U.S. over the past few decades, what candidates have shown that they need to do is reach across party lines to a certain extent and get independents and get moderates and, dare I say, to use a cliche, suburban women. And that's what I think about in this case. Does this make suburban women not want to vote for President Trump?
It should. And I would just qualify that by saying we are really in uncharted territory. So, I think when I look at this, if this is a two-person race, Donald Trump versus arguably Joe Biden as the Democratic nominee, it should, in a close election, go Biden's way, given the issues you're talking about. That said, the polls that Jody mentioned before, where we see people saying, if he's convicted, I'll think twice about supporting him. I have to tell you, we don't know. Does that mean if they think he's convicted of something he was innocent for, or convicted of something he's guilty for? Because it changes the equation. And we have nothing, academically research-based to go on, because, of course, we've never had a soon-to-be presidential primary nominee potentially facing something like this. And so we think it'll go that way. We don't know. The other thing to watch is a third party. His base sticks with him. A third party, an independent, comes in. Okay. Is that enough to throw an election? So many unknowns here.
Hey, folks, hang on for a second. We do have a live shot for those who are watching on YouTube and on our streaming service. Eugene Carroll, the Elle magazine columnist, just walking out of the courtroom in New York City. A lot of smiles, obviously surrounded, I would assume, by her legal team and other members of her team. Again, the headline at this hour, yes, a lot of smiles. It's been going on for a while. She went public in June 2019 with her claim that Donald Trump raped her in a dressing room of a Manhattan department store in 1996. She sued him after he issued statements claiming he'd never met her and falsely accused her of fabricating the assault to sell a book and advance a political agenda. Last year, she won a separate civil trial in which a jury found Trump, 77, liable for sexual assault. Her age is 80, he is 77. It's just, part of the story and just giving you some more facts. But nonetheless, a big crowd down there in New York City, downtown New York.
Once again, E. Jean Carroll walking out of the courtroom into a waiting SUV. For those watching on YouTube, could see those images. Jody Schneider, I want to bring you back in here. Bloomberg political news director joining us from Washington, D.C. Talk to us about your thoughts when it comes to not necessarily moving the needle when it comes to the base, but the question that I asked Jeannie earlier about the folks who matter in a general election once the former president is the nominee or the presumptive nominee.
Yeah, and you're right. That's what this election is going to come down to. It's going to come down to 7 swing states and who turns out to vote for president in those swing states effectively. And so everyone is going to be appealing to everyone in those swing states. You accept that you get your base, and then it's can you turn out others? Can you turn out independent voters? And that's going to be a real question for the former president. Is he going to be able to get anyone besides his base? And how much do things like verdicts like this turn off independent voters? And I assume that's something his team is talking about and perhaps worried about.
All right, so focal point here next is I don't know. It's going to be curious to see, we keep hearing about polls. One of the things I wanted to ask both of you, Jeannie, let me ask you first. We were fooled by polls before. I keep hearing people say, you got to be careful about this. How are you, as somebody who has seen different political cycles, have to kind of pull in what the polls are saying versus the actuality of how it all plays out? What polls are you watching, or do you think we have to be smart that doesn't always show how people are going to ultimately end up and vote in November?
It doesn't always show. It's going to give you a snapshot of a moment, and I think we have to take them in compilation. So we look at the broad compilation of public polling that we have faith in and that have scored well in the past, understanding that they too are in this uncharted territory because just like the pollsters, the voters themselves have never been asked to vote for president, somebody who has faced these charges, who has been found guilty, who has faced these kind of penalties, and people change their mind. I remind people a year ago today, Ron DeSantis was leading the polls. Now it is Donald Trump on the Republican side. So things change. It is a long time to November.
Go back a few years, and if you said that we'd be in this scenario, we would be like, no, there's no way a president or a candidate could run. Jeannie, we know you've got a busy day still ahead. So Jeannie Shen Zaino joining us here, of course, Bloomberg News political contributor. I want to go back downtown. We've got Eric Larson, our Bloomberg legal reporter, who's outside the courthouse. Just describe the scene for us, Eric, if you could.
Sure. I'm actually inside the courthouse, although I did look out the window and see the crowd as E. Jean Carroll and her lawyer were getting into that SUV. So there's a massive crowd here, more than has been here throughout the trial. So the courtroom's empty, though, and the courtroom will be closing soon for the weekend.
But relief on her face, smiles. We saw the video. She obviously must be pleased. We know the legal process isn't over, but she must be. For sure, yes. I mean, this is definitely a good outcome for her. She had requested $12 million in compensatory damages for her reputation. She got more than that, and they didn't specify how much punitive damages they wanted, but she got $65 million, which is, of course, a huge amount. So I think the evidence that they showed